Augsti godātais valsts prezidents.
Your Excellency, Mr. President, Madam Lagarde, Mr. Dombrovskis, ladies and gentlemen. It's a genuine pleasure to see you in Riga in the 100th anniversary conference of the Bank of Latvia. We mark its establishment in November 1922. Today, in our panels, we'll be able to meet experts and authorities, also international institutions, speakers, and experts from the academic spheres. There are 3 panel discussions in our conference, with a coffee break and lunch between them. Since this conference is an international one, I'll go on in English.
Ms. Lagarde, Mr. Dombrovskis, ladies and gentlemen, we are truly pleased to welcome you all at the Bank of Latvia Centennial Conference. The Bank of Latvia has been founded 100 years ago in November 1922. The conference features top-level officials and highly esteemed experts representing Latvian and international institutions and academia. The conference will consist of 3 panel discussions, coffee break, and lunch. And now it's time to open the conference. Please let me invite His Excellency, Mr. Egils Levits, President of Latvia, for the opening address. Please.
Mr. President of the Bank of Latvia, Madame Lagarde, Mr. Dombrovskis, dear honorable guests and conference delegates, I am delighted to open today's conference and welcome you to discuss the future of our economies in the euro area. It's a great honor for me to speak to such a distinguished audience here today. 2022 is a special year for Latvia. This year we celebrate 100 years of the 3 pillars of Latvia's sovereignty. The Constitution of the Republic of Latvia, Satversme, was adopted on 15th February 1922, whilst the first President of Latvia, Jānis Čakste, was elected in November of the same year. Also, in autumn 1922, Bank of Latvia came into being by a decision of the government, and ever since it has been the guardian of Latvia's monetary stability. Since the restoration of the independence, 1991, Latvia has lived through its fair share of challenges. We truly know what it means to transform our economy. Having been in the center of our financial system for so long, Bank of Latvia has been a stabilizing and guiding force. It is therefore natural that today our central bank is one of the key institutions to drive change and contribute to tackling the future challenges of our society. Climate change and transition away from the fossil-based economy being the biggest of them all. Madame Lagarde, we are glad to welcome you in Riga once again. During your visit 2012 as the Managing Director of the International Monetary Fund, you encouraged Latvia to join the Eurozone. You quoted the great Latvian poet Jānis Rainis, "Those who change will endure." And I am happy to say today that your encouragement seems to have worked, as Latvia is a member of the euro area already for 8 years. Together with our European partners, we are now focusing on common goals and shaping the policies in the increasingly complex modern economies. We recognize the need to invest our trust in European Union's institutions and structures to have the ability to respond to fundamental needs of our citizens. We live in a time with growing geopolitical security threats, including a full-scale invasion of a sovereign country in Europe and increasingly autocratic regimes challenging the rules-based international order, which is base of the peace in the world. As a result of Russia's aggressive war in Ukraine, we are now in the middle of an energy crisis and rising inflation rates across Europe and the world. As we prepare for the winter, there is no easy solutions to the current energy crisis. Only that we must isolate Russia economically and rid ourselves of prolonged dependence on its natural energy resources. Since the beginning of the war, Latvia provides most aid to Ukraine by share of our GDP. Ukraine is fighting also on behalf of all Europe and for our values. Next week, I am going to attend COP27 in Egypt. We will discuss that the shift toward cleaner sources of energy still is not happening fast enough to avoid dangerous levels of global warming. Energy crisis is also an opportunity. The International Energy Agency has said in the World's Energy Outlook report that Russia's invasion of Ukraine will accelerate a peak in the world's consumption of fossil fuels. Let us use this crisis wisely. I am glad that the Bank of Latvia advocates a more comprehensive inclusion of sustainability objectives in monetary politics. However, it is also a role for the commercial banking sector to become a more active participant in shaping Latvia's future economy. Finally, we need to develop Latvia's capital market to have new channels of financing and investments in green transition. Whilst the role of central banks evolves in the complex world of the 21st century, its independence is part of the accepted wisdom of modern economics and should remain as such. European Central Bank's mandate of maintaining price stability in the euro area is laid down in the Treaty of the Functioning of the European Union. In December 2018, I was one of the judges at the Court of Justice of the European Union who took part in the judgment on the question whether the ECB's government bond buying program were within its price stability mandate. We had to interpret from legal point of view the famous three words of your predecessor, Madame Lagarde, of then ECB President Draghi, whatever it takes. These three words saved euro. But the question was whether this statement was within the mandate of ECB. In the judgment, we confirmed the independence of EGP and the wide margin of appreciation of its mandate. This ruling was later controversially contested by the German Federal Constitutional Court, with implications extending well beyond the issues of monetary policy. This controversy, which was later solved, shows that the benefits of central bank independence from political interference are undeniable. Politics on both European and national level should preserve it and respect it. In Latvia, irrespective of economic and political cycles, Bank of Latvia can use its independence and analytical expertise to shape the public debate and overall decision-making culture. The European Central Bank runs a single monetary policy for 19 European countries, soon to be 20, which have their own fiscal policies and own appreciation of fiscal discipline. How will the current level of inflation affect the ECB's fiscal monetary policy mix? In short, we do not know yet. However, more than before, we need European Union governance structures and institutions that provide adequate and effective crisis responses. Many topics of today's conference will be about the future financing and transition towards greener economies. I consider the digital transformation of our societies as one of the most important tasks. The digital space has become a vital part of our lives, especially after global pandemic lockdowns. It has enormous potential to contribute to the sustainable development of our economies. In Latvia, we support innovative and proven digital solutions that promote the efficiency of public administration, public participation in decision-making, and the creation of new economic opportunities. To protect the strategic autonomy of European payments and monetary sovereignty, European Central Bank is working on introducing a digital euro in near future. However, to ensure that citizens can continue to trust our currency, we must make sure that their privacy is prioritized in this process. Security threats in cyberspace are increasing. If the digital euro is introduced, the data collected should never be passed, never be given to the third parties and used for surveillance and tracking of citizens. Therefore, in parallel with technological developments, we should actively define new legal principles of governing of Internet, in order to avoid the risks and damages to citizens' rights and freedoms. In my firm opinion, that only when all the issues of privacy, the danger of possible spying, tracking, and controlling of people are answered in consistency with citizens' rights and the rule of law, we can go on with creation and introduction of digital euro. Ladies and gentlemen, the euro is shared by over 340 million Europeans. However, we share more than a single currency. We share common values, laws, and interests, which must be defended at all times. The European Union's strength is in close cooperation amongst ourselves, with our transatlantic and like-minded partners in the world. We are changing together, and we will endure together. I wish you all successful conference and fruitful discussions. Thank you.
We thank the State President for his address, and now Mr. Mārtiņš Kazāks, Governor of the Bank of Latvia, will provide his opening remarks.
Labdien, dāmas un kungi, prezidentkungs, laipni.
Ladies and gentlemen, you are welcome to the conference of the Bank of Latvia. 100 years is not a joke, but it is just a beginning. We will discuss this all the day long, but now I will switch to English, since conference is an international one, and dāmas un
Executive Vice President Dombrovskis, dear governors, speakers, ladies and gentlemen. First of all, I would like to thank you, President Levits, for inspiring opening speech. tackling so many crucial issues that are to be decided now, tomorrow, and the day after, but not to be delayed. Not to be delayed. I think that's a very important thing to take away from today's conference. What we will be discussing about, it's not for the next generation. It is for us to solve. Ladies and gentlemen, it's great pleasure to see so many of you here in person, and also, of course, great pleasure to know that so many other colleagues of ours are joining the event today online. Our annual conference today is a very special conference because we are celebrating 100-year anniversary of Latvijas Banka. And allow me, therefore, to begin with a brief look back at the past 100 years. Freedom and independence never come for free. Also to Latvia, it didn't come as a gift. After having declared independence on 18th November 1918, Latvians continued to fight for the newly established country for 2 more years. To support the men fighting in the War of Independence, women, led by the Latvian writer Ivan de Kāja, established the Women's Gold Fund in 1919, and after the victory in 1920, this fund formed part of the State Gold Fund, which went on to become part of the reserves of Latvijas Banka, which, as we know, came into being in November 1922. I would like to pay tribute to the brave men who fought for the independence of our country. Their sacrifice will always be remembered and serves as an encouragement to the people of Ukraine, who today, more than a century later, are fighting another war of independence. And I'm sure Ukraine will win, just like we did in 1920. I would also like to show our reverence to the generous donations of the people of that time. Most of them were much, much less well off than any of us here today, which makes their contributions even more admirable. These reserves help to support a trusted national currency, the lats, which served our newly independent state well until its independence was brutally crushed by the Soviet occupation in 1940. During the half-century-long occupation, money played an important role in preserving our national identity and keeping the vision of independent Latvia alive. In particular, the 5 Lats silver coins of 1920s and 30s became a cherished souvenir passed on from generation to generation. And many of the families still had those coins in their possession in 1990 when we regained our independence. And many families still have them now. This is a true symbol of continued independence of the Latvian state. At the beginning of the 90s, Latvia had a brief period of the Latvian ruble as an interim currency, which took the brunt of hyperinflation. In 92, inflation hit sky-high 950%. It's still a vivid memory in the minds of many people here and has made us particularly vigilant about inflation and its very high costs to the economy and society. The Latvian lats returned as our national currency, a stable and trusted national currency, in 1993. The stability of lats this time around was guaranteed by a peg to the IMF's special drawing rights currency basket and later to the peg to the euro. Moreover, the past had taught us that preserving independence in long run and achieving prosperity would only be possible by integrating into the European and transatlantic communities. Latvia's membership in NATO and the EU from 2004 was crucial to secure our independence. Joining the euro area in 2014 was also a decisive next step, both from economic and a political perspective. To paraphrase the then president of the ECB, Mario Draghi, For a small country to maintain sovereignty in today's era of great power rivalry, certain aspects of its sovereignty have to be shared with other like-minded countries. It was a remarkable historic coincidence that when Russia's aggression against Ukraine started in 2014, Latvia had just become a member of the euro area for 2 months at that time. It was still very early days. This allowed us to knit ourselves even more tightly into the fabric of European nations and common European values. The euro is our currency, and we take a European view. Strong Europe means strong member states, also Latvia. And strong Latvia makes strong Europe. Already before our accession to the euro area, financial conditions in Latvia were greatly influenced by its monetary policy. However, we were not part of the euro area, and our access to financial markets was limited or non-existent when we needed most. When the COVID-19 pandemic struck, we were much better equipped. In sharp contrast to the global financial crisis of 2008 and 2009, Latvia could borrow at very favorable rates and provide support to both households and businesses during the pandemic. Once again, this tale of two crises shows us that being more closely integrated into the European fabric has made Latvia stronger. And as I said, stronger Latvia, in turn, makes Europe stronger. Today, the global economy and euro area face the challenge of high inflation, which is a true test to the inflation targeting framework. From a long period of too low inflation, euro area inflation has climbed fast to over 10% in October, core inflation at 5%. The key driver, of course, is supply side, especially energy and food prices driven by Russia's war in Ukraine. But demand-side factors have been becoming more prominent. Pandemic fiscal support is still filtering through. Labor markets are strong, and wage pressures show no easing. In fact, in certain cases, quite the opposite. While inflation expectations have been largely anchored at 2%, the risk of them de-anchoring remains non-trivial. The overall uncertainty is high, and the recession risk is looming. In my view, recession in euro area is already a baseline scenario, but so far it's likely to be relatively shallow and brief. And hence, it will be insufficient to break the backbone of inflation persistence. What does it mean for monetary policy? Monetary policy, in my view, must remain on a solid path of tightening. 3 consecutive policy rate increases so far have been a strong response. Their effect is only gradually feeding through onto the economy, but it is clear that the interest rates will need to rise much higher to bring inflation down to the target of 2% over medium term. And in my view, there's no need to pause at the turn of the year. The rate increases must continue into the next year, until inflation, especially core inflation, shows a visible slowdown. Of course, 75 basis point hike is not a permanent benchmark. It's not a step forever. Uncertainty is high, and decisions must remain to be taken meeting by meeting. At some point, rate hikes will need to become smaller, but they will have to be complemented with other policy tools so that all monetary policy instruments are fully aligned and streamlined to reach the inflation target. The first such step was taken last week with respect to the TLTRO3 program. The same will need to be done with APP soon. Of course, cautious at first. To avoid unwarranted and disorderly market dynamics, we have transmission protection instrument. But it's not the only instrument at our disposal. We also have PEP investment flexibility and OMT as part of our toolset. While central banks have on occasion been left as the only game in town, we like to see ourselves as team players. A good policy response requires a healthy policy mix with monetary, fiscal, structural, and macroprudential policies, each contributing their fair share. I would like to evoke an analogy with music here. While of course it is surely possible to listen just to the drums for a while, a complete rock band with a guitar, bass, and the lead singer, of course, can provide much richer sound. And we need a complete band rather than only monetary policy to solve the current challenges. Of course, the responsibilities of Latvia's Banka extend far beyond monetary policy. For instance, we form the backbone of the Latvian payment system. We have been active drivers of innovation. Latvia was the first Euro area country to introduce instant payments back in 2017. Following a decision by the Parliament of Latvia in the fall of 2021, we will have reintegrated financial regulation and supervision back into Latvia's Banka as of the beginning of the next year, which will allow us to streamline decision-making and enabling operating synergies. Ladies and gentlemen, the title of today's conference is Sustainability and Money, Shaping the Economy of the Future. The choice of the themes today is, of course, not accidental. We know full well that accumulation of unsustainable financial debt usually leads to a recession, followed by a painful period of deleveraging. Having learned the lesson, we in Latvia are now proudly emphasizing our relatively low levels of financial indebtedness in both the private and public sector. However, globally, and Latvia is no exception here, we all have been borrowing from the planet too much for too long and continue to accumulate debt towards it. Whether the imbalances that have been accumulated so far can be unwound without a massive storm remains an open question. But what is clear is that a complicated and long period of climate deleveraging is upon us. Navigating the climate and energy transition is our generation's #1 challenge. Yes, you heard me right. The #1 challenge of our generation, not the task of the next generation. Delaying this would be devastating and increasingly costly. We will discuss how we can face this challenge together and what role monetary policy and financial sector regulation can and should play in that. The other topic for today is money. While the economic history and the world holds episodes of financial innovations gone wrong, developed capital markets and efficient and secure payment system remain fundamental enablers of economic growth and prosperity. At the center of those is money that efficiently and safely fulfills its 3 key functions: a unit of account, a means of exchange, and a store of value. Technological changes today pose new challenges to the hybrid money system in which both central bank money and private sector money play an important role. We will discuss how money itself could and should change to reflect technological progress and foster economic development, and what's the role of society's ability and willingness to use those new technologies, and what central banks should do to facilitate and support those changes. Finally, let me invite you to a brief thought experiment. Let us imagine that the year is 2122, so 100 years into the future, and that Latvia's Banka is celebrating 200 years anniversary. Which of the trends or events that we view as important today will still be important enough to be reflected on then? I think it's safe to say that the current spike in inflation, nor the recent COVID-19 pandemic will make into the governor's remarks 100 years from now. I'm confident that in a couple of years, we will have resolved the current inflation episode, just as we have largely overcome the pandemic and its economic effects today. However, it does not mean that decisions taken to tackle these issues are not important today. The opposite is true. The faster we resolve such temporary challenges, the more time and effort we will be able to devote to addressing strategic long-term trends. The introductory panel today will discuss what we need to do now to both tackle today's issues and proactively deal with key long-term trends. I do think that the climate transition and technological changes in combination with the dawn of a new era of great power rivalry, as well as the fundamental change in Europe's security landscape following Russia's unprovoked aggression against Ukraine, will come to shape Europe and Latvia for decades to come. Latvia's membership in NATO, the European Union, and the Euro area gives me hope that a repeat of 1940 is impossible. However, we know that hope is not a strategy. In order for Latvija's Banka to celebrate its 200-year anniversary in an independent and prosperous Latvia, we must resolve the challenges that we are facing today boldly and decisively. We owe it ourselves, to our children, and generations to come. Therefore, today I look forward to gain valuable insights from all our distinguished speakers. May we have thought-provoking panel discussions and fruitful exchanges. Ladies and gentlemen, to the next 100 years. Thank you. And let me now welcome to the stage two very special guests, the President of the ECB, Christine Lagarde, and the Executive Vice President of the European Union, Valdis Dombrovskis, European Commission Valdis Dombrovskis.
Sit here.
Once again, thank you very much for joining the conference. It's very much appreciated. And
thank you for having us.
We are the capital of the financial markets today. So thank you very much. And of course, we are very honored to have you here. And of course, we also are very willing to hear what you have to say about the current situation, the challenges, and how we should go about solving them. For policymakers, it seems that crisis management is a daily routine. There is even a new word developed, permacrisis. So crisis on crisis, crisis after crisis. And it seems to be very much the case, because over the last 15 years, we've seen 3 once-in-a-lifetime crises. The COVID-19 pandemic came just a decade after the global financial crisis, and it posed an enormous challenge to health and global economy. But just when the pandemic seemed to be under control, Russia invaded Ukraine, and it hit the economies and started off yet another crisis, with energy prices, food prices rising very fast, and inflation reaching levels unseen in Euro area and in many countries across the globe. So let me, therefore, first start with Valdis to touch upon the war in Ukraine and its impact on the economies. Dear Valdis, you have been in charge of Latvia's financial crisis management more than a decade ago. Now you do the same on the EU level at the European Commission. So, could you please, with your experience and knowledge, touch upon 2 issues? First, what global geopolitical shifts has the Russian invasion set off, and how will this affect the European economy? And second, how do you see the support for Ukraine? And do we have a new Marshall Plan for Ukraine?
Yeah, thank you, Mārtiņš. Dear colleagues, well, first of all, I'd like to thank you for this invitation to this Bank of Latvia conference, and congratulations on your 100 years. So, moving...
It's of course, congratulations to you as well, because you are the best-known alumni of Latvijas Banka.
Thank you.
So, welcome to the club.
Yeah, thank you very much. Moving to the question on Russia's aggression against Ukraine and its economic implications, first, what I should say is that the best way to deal with the economic consequences of the war is to stop the war. And that's why we need to continue to put pressure on Russia through sanctions, and that's why we need to provide all necessary support to Ukraine, political support, economic support, financial support, also military support. And as regards this part of the question on geopolitical shifts, clearly we are not talking only about regional conflict. We are talking about conflicts between two value systems. It's aggressive autocratic imperialist regime attacking a democratic country. And we're talking about the situation where the war will spread should Russia prevail, because Russia is very open about invading also other countries. So it's clear that it's also in Europe's best interest to make sure that Ukraine can defend itself and can win this war. On the support to Ukraine, well, before we move to what you call the Marshall Plan for Ukraine, or Plan for Ukraine's recovery, we still need to get there. So it's also a question about short-term support which we are providing for Ukraine. So currently we are focusing on what we will be providing as a financial support for Ukraine next year. So we are aiming at 18 billion euros, and we are planning it already more or less for the whole year, because something which Ukrainian authorities also had been asking us to be kind of more predictable and more stable in terms of providing this financing. This year, of course, the war started and many decisions were taken on ad hoc basis, which led to relatively unstable and for Ukraine unpredictable financing flows. So next year, both European Union and other donors like United States, other countries, international financial institutions like IMF, World Bank, we are all planning how we can provide this support. So that's the first step to cover the immediate needs. And in parallel, indeed, we are already working on this Ukraine reconstruction plan. That is a major endeavor. As you know, World Bank estimate of the damage caused to Ukraine exceeds 400 billion euros or dollars. So clear that it will require lots of mobilization of international community, and also we'll need to see how to make sure that we follow the principle aggressor pays, and how what is going to be also Russia's responsibility to pay reparations to Ukraine, and how we can use also confiscated Russian assets to that aim. Thank you.
Thank you, Valdis. Dear President Lagarde,
Yes.
what do you think, in your view, are the key implications from these geopolitical shifts? How will this affect the European economy? How the fabric of the trade will change? And what implications for inflation and monetary policy do we see there?
Thank you so much, Martin, and thank you for having us. And Mr. President, it was very nice to listen to your comprehensive speech that really touched on so many of the issues that we're all facing. And finally, happy anniversary.
Thank you.
And best of luck to all of us for the next 100 years that will lead us to the 200th anniversary of courageous Latvian Central Bank. So, the geopolitical shifts that we are facing at the moment is of a broad nature. I think it's obviously triggered or amplified rather by the horrible, unacceptable, unjustifiable aggression and war led by Russia against Ukraine. But it also it epitomizes changes that have been at play for quite a while, and it certainly triggered an acceleration of a process. And it transpires in the trade numbers that we are seeing and in trade measures that have been taken for quite a while, where we are seeing, contrary to the post-China accession to the WTO, a movement towards more protectionist measures, concern about security of supply rather than efficiency of cost throughout the fragmentation of the supply chains, and where clearly each region, grouping several nations, will be looking at their security of supply, their economic organization, the destination of their products when they were heavily relying on exports, and where we are seeing the emergence or the confirmation of the emergence of blocs, epitomized obviously by the antagonistic and adversarial relationship between the United States and China. I'm not looking at Russia as and the horrible war against Ukraine as an episode or as a small manifestation of that, but I think we have to take a broader view and see how this whole geopolitical scene is actually changing at the moment. And I think that those changes will last for long and will transform us for long. I do believe that, for instance, we the Europeans, having realized to our peril the dependency and the vulnerability that we were in, still are in relation to energy, we will have to accelerate a transition that was already anticipated and expected under the Next Generation EU plan that was spearheaded by the Commission, to transition to a climate change friendly policy mix, which will necessarily be accelerated as we speak. It's not going to be just an issue of substitution of supply, it's also going to be a transition to alternative sources of supply. And here I'm talking about, all the renewable energies. I'm talking about nuclear power, which is being discussed in many corners around the European Union, and that will change for a long time the relationships that we have entertained for many years with neighbors. So trade will be affected. Supply chains will be affected. Prices will, as a result, also suffer upward pressure, certainly in the short term, because the cost of transition to a new policy mix, as well as probably the narrowing of the supply chain and heavier dependency on what we can produce and on reliance on reliable partners will probably exercise upward pressure on prices, hence consequences on inflation. I think that we have to distinguish, as you very well did, between short term and longer term. This is certainly going to affect us in the short term. In the medium term, when you look at the marginal price of additional unit of energy, it will have a different impact. But we're not there yet, and for the moment, critical investments will be needed. And I think that we need to position ourselves for that.
We should not lose the sight of the forest behind the trees. So.
Well, I was looking at what we have surrounding us, and I hope that in 100 years we will still have those trees as background to an excellent conference as well. But that's our job today to do it.
We'll come back to this issue.
Yes, I'm sure we will.
What's the role of the central banks? These geopolitical shifts, of course, will shape the world fundamentally, and especially economies that are open to trade, that are driven by trade. And for us, the rules, the certainty, of course, is helpful, and any uncertainty creates headaches, if I may say so. Let us turn to inflation. The ECB last summer approved its revised strategy with 2%, very clear 2% target over the medium term for inflation, with equally undesirable deviations above or below the target. Now what we see over the last year, a very rapid increase in inflation. Now already above 10% for euro area, and I'm speaking here about the euro area, not Latvia as such, because of course monetary policy is not made for any individual country. It's for the euro area as such. But it is extremely high, unexpectedly high. In many countries, we haven't seen such numbers for generations. Dear Christine, what are in your view, the key reasons for this very sharp increase in inflation? What has been the response so far of the ECB? And what are the further steps that we should expect? In short, what is your action plan?
Well, first of all, let me pay tribute to you, Mārtiņ, because I know how difficult it is to be the representative of a national central bank, but also to be a member at the governing council table representing the euro area. And in that sort of dual function, you have, I think, exceptionally well represented both your country and the European interests. So thank you for what you do at the governing council table. Let me second just reaffirm that what we have decided back in July 21, which was the completion of our strategy review, is absolutely critically important, and that we are single-mindedly focused on that, which is to deliver price stability, and we will do so. The objective, as you indicated, has been redefined. It's 2% symmetric, up or down equally undesirable, and it's medium term. So it's the combination of these three components that constitutes our objective and will help us deliver on the mandate that we have under the treaty, which is a single mandate of price stability, or primary mandate, if you will. So we are just determined to achieve the objectives, to deliver on that mandate that we have, and we will do so, as you have reminded us in the opening remarks, we will do so using all the instruments that we have available in our toolbox, and we have demonstrated that we can be creative in that respect, but certainly using all these instruments, and deciding meeting by meeting what is the most appropriate and the most effective ways of reaching our targets. So this is what we are driven by, determined to do, and as you rightly said, it may well be, and it's not in my baseline yet, but as you know, we have discussed that extensively. It's one of the downside scenario consequences to have a sort of year-end and beginning of 23 possibly mild recession, but we do not believe that that recession will be sufficient to actually tame inflation, and we can just let things roll out as it will be. We need to continue to deliver on our mandate and to find that interest rate that will help us reach the target that we defined as the 2% symmetric medium term, and we will do that.
The Fed yesterday, let me allow to kind of extend
so that becomes
the view.
A private discussion between us, okay.
Let me extend it a bit more globally. Yesterday, the Fed raised the rates by yet another 75 basis points. Of course, the global economy is very much kind of interlinked and interdependent. If the Fed is raising the rates so quickly and higher than earlier expected, does that mean that other central banks and ECB as well would need to do less?
That would be no, that would not be the appropriate conclusion. Let me just make a couple of points. One is comparisons are odious in general, and I think that we have to be mindful, because we are data dependent, of the differences between the United States and the euro area. We are not in the same situation. The labor market in particular is very different in the United States, at least for the moment, from what it is here. And the sources of inflation are of a different nature. It is clearly in the United States propelled by very strong demand that the Fed is trying to tame and repress. And it is operating in an extremely tight labor market with a phenomenon that we have not seen in most of the euro area countries, which is this great resignation, and which, I mean, in numbers, it's pretty straightforward. For each unemployed person, you have 1.7 vacancy in the United States. If you look at the same picture in Europe, in the euro area, for one unemployed person, you have 0.3 vacancy. So that's an indication of how different the markets are. So we have to be mindful of the differences. Having said that, there is a great interdependency, if you will, that is the result of the financial markets, where clearly what is decided in one corner of the world, particularly in Washington, has an impact on financial market on a worldwide basis. And we see that in yields movements very clearly. So we have to be mindful of each other, and we have to be attentive to potential spillovers, spillbacks, as I think the Fed is also mindful of. But each of us, the Fed, just like the ECB, have our respective mandate, and while we have to factor in such element like the Fed monetary policy decisions and other elements of international nature that will help us determine the best monetary policy, we are not alike, and we cannot progress either at the same pace, under the same diagnosis of our economies, but we are also influenced by the consequences, particularly through the financial markets, to a lesser extent through trade as well, because clearly the exchange rate matters and has to be taken into account in our inflation projections.
Yeah, because inflation takes time to feed, the exchange rate takes time to feed through into inflation. And that affects the medium term very much. Then the last thing at this moment on inflation, there are views saying that, okay, economy is already weakening. The households are already, and companies, hit by the energy increase. Why are we raising the policy rates? It may make their situation even more difficult. What would be your response to views like this?
My response is that everybody has to do what they have to do. And our job as central bank is to maintain price stability. And when it is far away from targets, as it is at the moment, our duty is to make sure that it is tamed and returned to targets, and that's what we are determined to do. Now, it is not going to reduce the price of petrol at the petrol station tomorrow, granted, because energy supply is clearly a significant portion of inflation at the moment. It's about 40% of our inflation. It is not either going to smooth the obstacles along the supply chains, which are gradually fading away at the moment, by the way. But our duty is certainly to, number one, stop any accommodation that, in a way, stimulate demands when you have inelasticity of supply. It's like, you send a wave against a wall. Well, what happens is that prices adjust eventually. We cannot continue doing that, and we have to withdraw anything that we have done in the past, rightly so, to stimulate demand, particularly during COVID. And the second thing that we absolutely need to do is to make sure that inflation expectations remain anchored, and that we really fight the risk of those expectations de-anchoring. For the moment, they're broadly anchored. They've moved up towards the 2%, and they sort of are around the 2%, but we need to make sure that they stay there. That matters a lot.
Yeah. Thank you, Christine. Valdis, the very recent IMF World Economic Outlook very clearly says that inflation is the key problem for policymakers, and also very clearly prioritizes the policies by saying that tackling inflation is the key policy decision choice at the current moment, and monetary policy should hike the rates to solve this problem. From your experience of 1990s, when inflation in Latvia hit, well, it shot up into the atmosphere as high as nobody can see. In 2008, Latvia had inflation of 18%. From your experience of those years, would you agree with this, that stemming inflation, not allowing it to root in, is really the key policy choice for the policy mix as such?
Well, actually, I would agree with this because indeed high inflation is a most direct way of eroding purchasing power and living standards, something we saw exactly in very late 80s, very early 90s, and something we are seeing now, of course, to much lesser extent than back then, but the problem is clearly there. So what we need in response to this crisis is a coherent policy mix. And what the IMF guidance in this regard was saying that monetary policy and fiscal policy should not be working at cross purposes. And I would say it's very much aligned, which is also European Commission's guidance to EU member states. So that's why obviously ECB needs to do its job with monetary policy tools at its disposal, but we also must see what is fiscal policy response. So contrary to, for example, COVID-19 crisis, when we were recommending to provide a broad-based fiscal stimulus, now we are not recommending broad-based fiscal stimulus. We are rather recommending to have a broadly neutral fiscal stance, and the support measures, which are no doubt needed to support vulnerable households, to support companies which are in difficulties due to high energy prices, need to be temporary and targeted. Also, what we are seeing is, well, changing financing conditions. Interest rates also for sovereign bonds are going up. Also, from that point of view, there is case now for more fiscal prudence.
Mm-hmm.
Can I add one thing?
Yes, please.
Because obviously we have to work together, and we do. And I really I'm very happy that we can work with Valdis on those issues. And we repeat regularly temporary and targeted for the fiscal measures, and that's obvious that the most badly affected, the most vulnerable, must receive support and fiscal support, and that support should be temporary because we will get over that phase and we will succeed in due course. I myself add also tailored. Measures have to be tailored so that there is always an incentive to save energy and to direct spending in the right directions. So that's my third T.
Yeah.
So tailored, targeted is Valdis. Sorry, temporary, targeted, and I add tailored because you know if you support, even though it's temporary, but if you don't add the incentive and the signal, the price signal in particular, for people and consumers to understand that it is also part of the response and the fight to actually reduce our consumption, I think we would be missing an opportunity.
Valdis?
Yeah, well, obviously, that was a third aspect I also wanted to highlight, due to the fact that a large part of the inflation we are currently experiencing is due to high energy prices. It also requires measures in the energy market, energy sector, dealing with the root causes of this crisis, and that's what we are also doing from European Commission side. It concerns both energy saving measures. It concerns targeted adjustments to the functioning of energy market, including electricity market, with a revenue cap for inframarginal producers, with one-off solidarity contribution for fossil fuel sector, which should also generate revenues from the states to provide necessary support to households and companies. We're working on more structural reform in electricity market, decoupling electricity prices from natural gas prices. Obviously, there was lots of work to find alternative supplies due to the fact that Russian supplies are down, notably on natural gas. But to a large extent we manage this. The gas storages are now full. We managed to completely change the structure of suppliers. Norway is now biggest supplier of natural gas to the EU, followed by United States with LNG. So obviously there is lots of work which we need to do specifically in the energy, which will also then help eventually to address a broader inflation question.
So what you both are saying is that indeed we need a fully fledged rock band, okay? Just drums don't work. We need all the other guys and maybe even adding keyboards or something else. So all the policies need to be spearheaded to address these issues. Relying too much on one may create problems for the future.
What's even worse is when one works against the other. Then,
And this is implicitly what you were describing is inflation implicitly very much is a difference, is driven by the difference between demand and supply. And if demand is high and supply is low, of course, it would be nice that supply side, which is always more sustainable and productive driven, moves up more than demand needs to come down.
Yep.
If supply side is stuck and we only work through demand, then we're going to create much deeper recessions, and nobody wants that. So supply side is really fundamental to solving today's short-term, medium-term, and long-term problems. I fully subscribe to that. I'm in a very different and difficult position because I'm also a policymaker, but I cannot give my answers. I'm only the moderator here, so I will rely very much on you. But let's come back to the fiscal policy, Valdis. And if we take a look at the fiscal policy, when will fiscal discipline return? Currently, the limits have, by and large, speed limits have been removed for this year, next year. What do you see from the European Commission's perspective going forward?
Well, on one hand, one can say, yes, indeed, the general escape clause stays activated this year and next, meaning we are not setting quantitative budget deficit targets for member states. Well, given the very high uncertainty which we are facing, it also would be, I would say, a very difficult task to do so. But at the same time, fiscal policy guidance, which we are providing to member states, is changing. So I already outlined the guidance which we are providing. Especially on high debt countries, they should start focusing on debt reduction. Also, overall, we are not recommending to provide fiscal stimulus to the economy, rather be targeted and temporary, and pay more attention to fiscal sustainability issues. I think this is going to be very much reflected in country-specific recommendations, which we'll be providing soon to member states in autumn European semester cycle, and something which will be following through and both in autumn and spring European semester cycle. Because one thing which is worth remembering that even when a general escape clause is activated, it is not suspending the Stability and Growth Pact and its procedures, including excessive deficit procedures. So there are tools how to intervene should we see some, so to say, gross policy mistakes being done by member states.
Dear Christine, do you see the risks of fiscal dominance or financial dominance?
No.
Ah, good. So,
No, I tell you why, because I think that we have to just guard against it. Yeah. And as celebrated by the president, a central bank is independent. And this is a matter that has been settled, that is very clear and straightforward in the treaty, Article 130. The central bank and any members of the European system, the Euro system, cannot be put under pressure of fiscal authorities. And I think that is something that has served us well, that we have to defend, and we have to guard against any such potential fiscal risk. We have to be focused on our mandate, deliver price stability, and fiscal authorities have to do their job.
yeah.
Including the sort of longer-term purpose that has been indicated by Valdis, which has to do with debt sustainability, which has to do with a long-term process that member countries, some of them in particular, will have to take.
Mm-hmm. So we have instruments at disposal of the monetary policy to deal with unwarranted and disorderly market reactions,
yep.
But of course the financial and fiscal, especially in this case, fiscal sustainability is the business of other policies.
Absolutely, yeah. Absolutely. And you mentioned them in your speech, so
yeah.
Yeah.
Yeah. What about the experience, for instance, what we saw a few weeks back in the UK, when the financial markets were very volatile? How do you view the risks of interplay of monetary policy and kind of financial stability issues? What is the role of macro-prudence? And where do you see the risks? We already are having a question. I think that's a good one. Where do the banking system stand there? It's quite solid, but what about the non-banks?
Those that we used to call the shadow banks. Yeah. Well, first of all, I think that what the United Kingdom experienced was watched very carefully by all monetary and fiscal authorities around the world, probably, but certainly on our side of the channel in continental Europe. And I'm sure that it is a phenomenon that will stay in the memory bank of those who make policy decisions. And if anything, it's a history of making sure that budgets, however mini or maxi budgets, are actually financed, and that this combination of revenue and expenditure actually is consistent with sustainability going forward. And I think that was the clear signal. The market turmoil that was then experienced is also another lesson that we all have to take into account. I think it's fair to say, for those of us, you, Valdis, were a prime actor in that field, that after the great financial crisis, all of us around the world decided that the banking system had to be better regulated, more supervised, with more significant buffers and control over leverages, in particular, liquidity ratios, capital ratios. I mean, we have really sort of sophisticated the machinery in order to make sure that that sector is more solid, is safer, and that depositors feel confident. But as is often the case, risks tend to migrate, and they tend to migrate to corners of the system that are a little bit more obscure, less transparent, probably less regulated and less supervised. And I think that this is a phenomenon that we have just recently experienced here in Europe, whether it was the Swedish commodity trading relationships, or whether it is the guilt issue that was encountered as a result of the very abrupt movements that were experienced by the markets. A similar phenomenon occurred in the United States as well, and I think it is absolutely necessary at the international level, at the Financial Stability Board level and other international institutions, to look deeply into those sectors of the financial markets and to see how we can best, in a way, protect them against their own temptation, and make sure that there is stability and that we can restore it and that we have the right circuit breaker in order to protect depositors, consumers, and investors.
To tackle these issues, of course, two things. One is be vigilant, follow what happens in the markets, and then act when necessary. But of course, it very much...
And learn from
the experiences. And your example of the energy wholesalers in the Scandinavian countries and the Baltic market, such of course, was very instrumental as well. At that time, the guarantee was enough. There was no intervention necessary. So,
and coordination between the actors.
Exactly. That's what I'm driving at. Thank you very much. So, no, that's very good. So, Valdis, coordination. Coordination. This is the buzzword that's very often heard. But European Union institutional infrastructure, of course, it has been improved massively since the global financial crisis. We have so many players now in the market that are making the situation much more safer, and crisis response is much more quick and coordinated. But we have one monetary policy for the euro area. And as the president of Latvia pointed out, we have 19, soon to be 20, fiscal policies. Is there any chance, and is there a need for common fiscal facility and more coordinated fiscal policy? And how likely is it to happen?
First of all, on coordination and lessons learned from the global financial crisis, Christina already mentioned all the reforms in banking and financial markets sector with much stricter supervision and regulation. Also, the European semester, which I was mentioning, our main tool to coordinate macroeconomic and fiscal policies of member states, was introduced as a lesson learned from global financial economic crisis. And I would say also in a current context, it's highly relevant that we are doing this macroeconomic policy coordination through the European semester. On common fiscal tools, we know that's a new discussion. This discussion is going on already for many years. One could say that for a time we are having this common fiscal tool, which is a next generation EU, which was economic recovery plan post-COVID, which is for the first time financed through joint European borrowing, and we are still in I would say the beginning of its implementation. There are well over 100 billion euros which are disbursed now, but there are still much more substantial amounts to be disbursed within Next Generation EU. There are still 225 billion euros on untapped recovery and resilience facility loans which are available to member states. We came with a proposal, and hopefully co-legislators will agree so on additional 20 billion euros of grants through Repower EU facility to address exactly current energy problems. So I think right now it's important to focus on utilizing those instruments fully. And as we were discussing just before, at current stage, we also should not be aiming at some kind of broad-based fiscal stimulus to the economy. Also, from that point of view, we need to be a bit more prudent on what our fiscal policy response is.
Yeah, but there's also other sources that we have not fully used yet, which is, for instance, banking union completion, capital markets union, single market for services. So we have lots of treasures hidden, that we can still utilize. Seeing that we are, quite quickly about to run out of time, let me continue to the table of some of the key issues that will also be discussed later on. And one of those, of course, is climate policies. Climate is part of the ECB strategy since summer last year, formally. Okay, but we have already, as central bankers, have been involved in this area for quite a while. Christine, you have been very vocal on these issues, supporter of these climate-related issues. And ECB has done already quite a lot in this area. Could you please tell why? Why is it important for central banks? What the central banks are doing in this area? What has been done? And what are the key steps forward?
Yeah.
Please.
I guess everybody in this room will agree that climate change is a major risk. I don't think that anybody would actually disagree. And you know that we are in a strange, awkward situation when our relatively safe energy position today is partly attributable to the mild weather of October. So Mother Nature is giving us a little signal here. You know, I'm here protecting you, but please protect me as well. Why would a central bank be concerned about that? Our mandate is price stability, and I'm not moving an inch from that. Well, central banks have to be mindful of that because it matters for determining their monetary policy. Why is that? Because our monetary policy aims at reducing inflation, bringing it to the target. Why is inflation affected by climate change? Well, think for a second, an example that is not very far away from us, let alone, you know, the coastline of Bangladesh, the flow of refugees. But think about the Rhine River that could only transport half-full barges throughout this summer, as well as 2 summers ago, which had an immediate incidental impact, not so incidental actually, on the GDP of Germany. And that is the same in many corners of the world, and certainly corners of the euro area. So inflation is impacted by climate change-driven phenomenon. We fight inflation, we have to understand the components of inflation. So in our monetary policy design, climate change actually matters and has to be taken into account in the model that we rely upon, in the thinking that we apply, and in the judgment call that we make. Number one. Number two, we have to manage risks. And to properly manage risks, we have to also understand externalities and risks that are not yet properly factored in. Now, to the extent that we have corporate sector bonds, the value of which is not necessarily perfectly determined to take into account externalities yet, we have to be mindful of that. So this is the reason why, as of 1st of October, we have been applying this tilting measure that takes into account not only the footprint, but the transition intended by the corporates of which we hold bonds. And the third dimension, which matters also for central banks, is the supervision function that we have vis-à-vis the banks. If we don't tell our supervisees that they have to take into account risks properly, then our supervision job is not delivered properly. Hence, the stress testing jobs that we do, the assessment that we help banks conduct, the friendly warning that we give them to say, you are not yet taking into account climate change in order to properly assess the risks that you are taking when you extend credit of companies that are not themselves valuing risks properly. So from those 3 dimensions, it's important that we take climate change into account. But a central bank is not the main driver of this. We are not driving that bus. Governments, parliaments, commissions in Europe are driving that bus. They are the ones that will give a price to carbon emission. They are the ones that will take the appropriate measures. But each and every one of us has to ask himself or herself or its institution, should we be concerned, and what can we do about it? And I think that the Governing Council responded beautifully by agreeing that it is part of our strategy and that we have an action plan to deliver upon, which we are delivering upon in a very timely basis and with determination.
Thank you, very clear answer. It's very much about, and predominantly about, monetary policy. But of course, individually, we are all good citizens caring about the environment and the economies of current and next generations. So, and we're also obliged to support European policies when it's possible and appropriate for monetary policy. So I see no doubt and no questions asked, exactly like you, Christine, that central banks have to be there. And we have a role to play.
And the Commission is delivering as well,
Absolutely.
big way.
Yeah.
Green bonds is something that we have to be proud of and to continue developing.
Valdis? Yeah, Valdis.
Sorry.
Well, it's true. I would say if we look at our flagship policy, European Green Deal, also the response to the current crisis, to the Russia's aggression against Ukraine, and related energy prices and so on, part of our response was actually to accelerate the measures under European Green Deal. Well, first of all, we need to move away from our dependence on Russian fossil fuels, but okay, we are obviously concentrating on replacing them now with other suppliers, but also we are accelerating the phase-out of fossil fuels in general, because this is, by the way, one of the drivers of the current high inflation. It's exactly fossil fuel prices, because when I was mentioning previously revenue cap we are putting on inframarginal producers, it includes renewables, it includes solar, wind, hydro. So already now we can have lower production costs with renewables, also accelerating energy efficiency measures, other steps. So actually we see that our European Green Deal is part of the solution also to address the current crisis.
What would be your very brief advice to Latvia?
Well, as you know, Latvia is about to form a new government, and probably the first task of the new government will be to prepare next year's budget. And also for Latvia, it will be very important to find this right balance between providing support to households and companies who need it and overall fiscal prudence, because we actually see that in Latvia and Baltic states in general are the countries which have one of the highest interest rate increases in the EU. Also from that point of view, it's important to move more towards fiscally prudent policies, and obviously to continue to work on the energy side, on alternatives of the gas supplies to the Russian gas supplies.
Should we wait with the climate change issues, or should we move today if we haven't moved yesterday? So well, how urgent is it for Latvia?
Well, as I said, I'm not seeing a contradiction there. As I said, that a number of targets which we are setting as within European Green Deal are very relevant to address the current crisis, including energy efficiency measures, where actually there's quite a bit to do still in Latvia, including all in all in addressing our energy mix, our dependence on Russian gas supplies. There is still lots of work to do. In terms of renewables, obviously Latvia can continue, even though it must be said Latvia already has one of the highest renewables share in the energy mix in the EU.
We cannot wait.
Yeah. Full agree.
Mother Nature will not wait.
Yeah. It will only become more expensive. The first mover's advantage is really there. Let's move to technologies and central bank digital currencies. Of course, technologies allow for that. We see private sector active in that area, private money, central bank money. What's the role of the central bank? Why do we need digital euro? If we need it, when it will come? Will it be strengthening the role of the euro internationally? What's the thinking about it?
Okay, the thinking about it is the following. Central banks play a role by providing central bank money. We have historically done that. You've mentioned the three attribution of currency and money, if you will. We have done that historically. And we've done that essentially through the conduit of what people traded with. and that was banknotes and coins. And of course, there was commercial bank providing commercial money, if you will, but the reference, the anchor, was always central bank money. When we look around the world, we see that many of our compatriots in Europe, in the euro area, continue to use banknotes, yes, but are more and more interested in digital currency, whether they use their telephone or whether they use plastic cards. However they do so, they rely on digital means of payment. So, confronted with that, we have to do two things. One, we have to maintain banknotes and coins because people will continue to be attached to that, and that is fine, and we have to respond to that demand. But we also have to invent the form of digital central bank money that will be available and continue to provide the anchor that is needed for the system and the sovereignty to be expressed in monetary terms. So that's what we're doing. And we're doing so in the face of significant innovation, which we don't want to stop, prevent, or slow down, but in the face of attempts by private sector operators to take as much as possible of the market space. And that can happen, but the role that monetary, that central bank money plays cannot be taken over. So we have to be there as well. I will not go, because the audience is far too sophisticated for that, go into the difference between crypto assets and stable coins and structures of payments. But we need to move in the dual direction of improving our payment systems, the infrastructure that we have, and we have to move fast in the direction of digital central, of CBDC, central bank digital currency, the e-euro, if that's how we decide to call it. As you know, we've embarked in that process. We have determined in October 21 that we had done enough preliminary research to actually launch a phase of exploration. We will decide in October 24 whether we give the green light and go ahead with it. And that's the path that we are on. And to address the concern of the president of Latvia, of privacy, it is something that we have heard loud and clear, because we have done some client groups, if you will, or citizens of Europe surveys. And the topic that came first and foremost in their list of concerns was precisely privacy. So 43% of the people surveyed throughout the whole of the euro area said, we want our privacy to be protected. Now, it was more in some countries than others, but generally there was a concern for privacy. And that is something that we need to pay close attention to. It is never going to be as private as banknotes, let's face it. No matter whether we use distributed ledger technology or other technologies, there will be an element somehow that will leave a trace. And that's also one of the benefits of what we are trying to do. But number one, a central bank will never monetize any data that it has available, unlike private players and corporate institutions that typically tend to monetize whatever assets they have accumulated. So we will not do that. And second, we're also looking at how for minimal amounts, minimal payments, we can actually avoid disclosure of data and accumulation of data that would be contrary to the concerns of citizens. And in doing that exercise, we work very closely with the Commission, so it's a joint exercise between the ECB and the Commission in order to make sure that we arrive at the right balance of providing that digital money in central bank money and protecting the privacy of citizens while having something that can be user-friendly and serve the purpose of a currency.
Yeah, thank you, Mārtiņš. I think Christina already said many things on central bank digital currency. Indeed, we are working very closely with European Central Bank. We had set a joint working group to deal with those issues. We are discussing it regularly at the finance ministers' meetings. Just a couple of more of observations. On privacy, I think it has been said, and clearly we will prioritize privacy, but we need to keep in mind that we also have our anti-money laundering framework, counter-terrorist financing framework, and like now, we are doing those AML checks for bank transactions. I don't think it will be possible to avoid it for CBDC, even though there are ways how to identify some low-risk transactions. Another issue which came very clearly from also public consultations which European Commission has done, that citizens expect or do not want this to be as a replacement of cash, but rather something which is complementary to cash. So it's clear that we will continue to ensure availability of cash, and we even intend in the upcoming legal proposal concerning the digital euro, which we are planning for next year, also to propose legal tender status for euro cash, in a sense to alleviate those concerns. But it's true, the world is moving digital. We are undertaking the digital transformation of our economy, and it's clear that also central bank and euro should follow this digital transformation which we are currently having.
Thank you, Valdis. In short, of course, we will keep supplying, as central bank will supply banknotes. As long as the society will request for that. And we do see important benefits there. It's also the issue of national security, okay? And it's not only kind of wartime issue, it's also at times of natural disasters and any other uncertain events that may happen. So there is a role for cash, for banknotes. But of course, digital area is where we need to move in and provide support to the society and our economies. Valdis, let me pose my last question, and then we have 5 minutes, almost 10 minutes for the questions from the floor. Yes, there are lots of crises. Crises come, we deal with them. And we do see that, by and large, we do manage them quite nicely. The euro area is strong, and we see that at the beginning of the next year, Croatia will be joining euro area. So from 19 countries, we will grow into 20 countries, and there are other countries that are lining up as well. So undeniably, being part of the euro area is a benefit to the members and to the European economy and the societies in our countries. Dear Valdis, what are your key lessons that you would say to Croatia when joining the euro area? Because you were at the top of the Latvian government when we introduced the euro. What are the key lessons they should learn from Latvians?
I think there are actually quite a few. But first, of course, in Croatia, like in Latvia, there is a de facto fixed exchange rates. So through this, Croatia is already now importing the monetary policy of the ECB, but not enjoying the benefits of the euro. So joining the euro will also let them to enjoy the benefits of the euro and give them, so to say, voice around the table of the ECB governing council. And if you look a bit in a retrospect for Latvia's euro introduction, the first date for euro introduction was set in January 1st, 2008. Then it was quickly postponed due to high inflation to 2011, then it was postponed due to the crisis. But if we now just imagine if Latvia would have managed to introduce euro as it was planning initially in 2008, also the global financial economical crisis would not be so devastating for Latvia as it was, because our banking system would have available ECB liquidity. We would not be under speculative attacks on our national currency lots. So there would be several factors which would actually soften the blow. So being part of the large currency union, of course, is providing additional stability and reassurance. And it's very true also for Croatia. But we also must not forget that also in Eurozone, there was Eurozone crisis. So also joining the Euro, countries should not forget about sound macroeconomic and fiscal policies. Thank you.
Yeah, I think it's very clear. Being part of the Euro provides stability and gives lots of opportunities, but it's the way the countries use it. So the national policies, be them fiscal, structural, macroprudential, are at the very top of the agenda there as well. Euro is not a free ride and not a solution for everything. Euro is help to reach higher, to reach towards higher ambitions and do better. But it's not a free ride thing. Thank you very much. Let us move to the questions from the floor. We have time for 2 questions here. Let me start with Christine. You please, how big is the likelihood? No, sorry, that's not the one. It's not matching exactly the ordering here. What's your view on the, what in your view is the indicator of receding inflation? Should we look at the headline or core figure of inflation only?
Well, first of all, we will indeed look at headline, at core, and at many other distinct measurements of inflation in order to really understand the pass-through and the speed and the origin of the price pressures. So it's not one single indicator, it's a series of measurements. But you know, we will be looking at several things. We will be looking at inflation in its variety of measurements and at the economy at large and its situation. We will also be mindful of what measures we have decided. And we will be attentive to one thing which is a tricky and difficult one to really fully appreciate, which is the time lag between the decisions that we make and that accumulate from, you know, front-loading to sort of normal cruising decisions, to really understand the time lag and the impact that it has on the economy. So I think we will be looking at those 3 key factors, as I have mentioned already in the last few days.
Thank you, Christine. And Valdis, one more question to you. The last one on the screen, feels that the EC, the European Commission, plan to deliver on EU Green Deal is to do that through financial institutions to a large extent. Is it the main lever here?
Indeed, it's very important lever. Clearly, to deliver a Green Deal, we will need lots of public financing, and there are many tools. For example, in our Recovery and Resilience Facility, 37% of the member states' spending needs to go towards Green Deals. There are climate mainstreaming targets on other EU funds, programs. There are dedicated new instruments like Just Transition Mechanism and Just Transition Fund, Climate Social Fund, and so on and so forth. Member states are doing a lot through their public investment programs, but the scale of additional investment needed is such that it's true that the private finance will have to provide bulk of the response, and that's indeed where our sustainable finance agenda comes in, how to steer also private investments towards those sustainability goals. So in terms of the amounts of money, clearly private finance will be the one providing bulk of the funding.
Thank you, Valdis. Thank you, Valdis, very much. Thank you, Christine, very much. It's been a pleasure, and it's been very rich and insightful on the way how we go forward. And I think one of the, if not the key conclusion well, I would say two conclusions from this is, Christine, what you said. One is there is no time to waste. We have to move now. Let's not delay these decisions. And it's both for the monetary policy, but also for other policies. And I think this is point two. We need a healthy mix of policies so that we are not at head against head with each other. Because then we would need to overdo on part of any of the policies. So coordination and understanding of what the fully fledged policy mix is very important. And it is by far not only fiscal and monetary. It's much, much broader. Thank you very much. And a round of applause. And thank you.
Great job.
Thanks a lot. And now we break for a coffee break. And we are back with a discussion on beyond climate, greening, all related issues. And climate change is just the beginning. Okay. Thank you.
hopefully you have a good coffee break. And actually, it's now time to start next one. We should start panel discussion, Shadow by Carbon. And let me introduce moderator, Ms. Ines Suja-Markova, Vice Mayor of the Cēsu municipality, and she will introduce others.
Thank you.
My scenario says good morning, but I think we have approached the middle of the day, so I should say good day. Your Excellencies, ladies and gentlemen, and sincere greetings to everyone attending this conference in presence and also following us online. And I would like to extend a very warm welcome to the panel discussion named Shadowed by Carbon. As presented, I'm going to be the moderator of this discussion, introducing you to 3 distinguished panelists, experts, and also guiding you through various questions, hopefully interesting questions that will give you also lots of food for thought to bring with you after this conference. So let me begin by introducing our first expert who, despite being unable to attend in person in Riga, will be joining us online. So we will do this discussion in a hybrid format. And I have a great honor to introduce you to Mr. François Villeroy, the governor of the Banque de France. Good morning.
Good morning. Good morning. I hope you can hear me. And I'm delighted to be in Latvia, even if it is only online.
Wonderful. We have a very real sense of having you in presence here on the stage.
Okay.
Yes.
Okay. And can I thank especially my friend and colleague, Mārtiņš, Kazāks, the governor of Latvia, because we meet very often in Frankfurt with pleasure, but it's good to be in Riga even online.
Thank you, Governor. And just let me say a few words about the Governor himself. He has been reappointed in this office for the 2nd term in 2021. And he's a member of the Governing Council of the European Central Bank and the chairman of Prudential Supervision and Resolution Authority. So it's really a pleasure to have you with us this morning and in this conference. And then I'm delighted to proceed with the other 2 panelists who are in presence here in the hall. And I would like to invite on the stage Mr. Frank Elderson, a member of the Executive Board of the European Central Bank and the Vice Chair of the Supervisory Board of the same bank. Good morning once again. And Mr. Elderson co-chairs the task force on climate-related financial risks of the Basel Committee on Banking Supervision. And for 3 years, he also served as the first chair of the newly founded Network for Central Banks and Supervisors for Greening the Financial System. And we're going to talk about that later in our discussion. So welcome.
Thank you. Thank you very much.
Thank you. I have a great honor to introduce you to the 3rd, our distinguished panelist, who has come, I think, all around the world to reach Riga, crossing different time zones. So Dr. Gretchen Kara-Daly, a professor of environmental science at the Stanford University, director of the Center for Conservation Biology, senior fellow at the Stanford Woods Institute for the Environment, the co-founder and faculty member, director of Natural Capital Project, and member of SEB Bank External Sustainability Advisory Board. I think I could proceed with a really long list of achievements, but still I would like to highlight that Professor Daly's led research group is advancing science to support the deep societal transformations needed to secure people and nature, and her efforts span fundamental research and engagements with decision makers in many countries all over the world, focused on valuing nature in policy, finance, and operations. And Dr. Daly has been awarded numerous international honors and has published hundreds of articles and dozens of books. So it's really a great pleasure to have such a distinguished panel today. So thank you very much once again. And of course, we expect also during the discussion, we expect the active engagement of the audience. So please use the Slido platform and the code #LB conference, which is just in front of you on the big slide. And it would be very nice also if you indicated to whom the question is being, to whom of the panelists the question is being addressed. So be active and dare to ask. So the title of this presentation is Shadowed by Carbon. And just to set the stage for this discussion, let me give you introductory notes before we proceed with questions. This year marks the 50th anniversary of the Stockholm Conference, which made the environment a pressing global issue for the first time, exactly 15 years ago. This year also marks the 35th anniversary of the world-known report, Our Common Future, which is also known as Brundtland Report. And this report awakened everyone's need for progress towards sustainable economic development that does not rely on destroying natural resources and harming environment. Part of what makes the Brundtland Report very important is that it also gave the definition of sustainable development, as it is still actively being used as a touchstone by businesses, institutions, financial world, governments, voluntary bodies, and others. But what have we reached in these 15 years? What have been our achievements? First, we have reached a tipping point where the threats to sustainability, the sustainable future, have come together and are faced by the majority of the world. Second, we have begun to recognize the magnitude of the changes we are causing to our planet as a result of climate change. And that was also emphasized, and we heard the reference to that also in the first panel discussion. Third, we have built sufficient scientific and empirical evidence base that the stability of the Earth is at risk, and we have to act now. And we need urgent transformative changes in our socioeconomic and financial systems. I think there is, as also was a reference made in the first panel discussion, there is probably no one in the conference present who disagrees that climate change is widely recognized as the biggest sustainability challenge of our age. And but at the same time, we have to admit that it is interlinked with other environmental threats that directly impact the stability of the Earth and the future of our existence. And I'm talking about the loss of biodiversity and overexploitation of natural resources. From the macroeconomic perspective and the financial system, which are in the focus of today's conference, the debate of whether the climate change poses risks has largely been settled, if I may say so. Central banks and financial supervisors in Europe and globally have been undertaking a wide range of activities in the assessment and mitigation of climate-related risks. And these include financial and economic stability research, assessment and signaling, strengthening of awareness of various stakeholders, capacity building, contribution to the financial architecture through refining of standards, taxonomies, disclosure frameworks, the development of prudential policies and instruments, integration of climate-related considerations into monetary policies that we also heard of, and into central bank investment portfolios. But just to give you the examples of very recent measures. In June this year, the Basel Committee on Banking Supervision published a final set of principles on climate-related financial risks that seek to promote an approach to improve risk management and related supervisory practices. After 18 months of hard work, the European Central Bank announced its 2021 strategy review that it plans to take climate change risks into account in its monetary policies. The ambitious roadmap makes it very clear how climate change considerations will be integrated in the ECB's macroeconomic models, projections, scenarios, and analysis and transmission of monetary policy. The European Central Bank is also on the way reducing the carbon footprint in the portfolio and monetary policy operations by decarbonizing its corporate bond holdings and collateral frameworks. And just yesterday, the European Central Bank published the results of the 2022 thematic review on climate-related and environmental risks. And the results are revealing that despite of achievements, and there have been achievements, the banks still need to better identify and manage climate and environmental risks. And consequently, the ECB is setting deadlines for banks to progressively meet all supervisory expectations by the end of 2024. So very recent news. So compared to climate change related risks, the incorporation of environmental risks, and especially the most complex side of the environmental risks, biodiversity loss into risk management frameworks and supervisory practices is lagging behind. And I think you can agree to that. Biodiversity is complex and multidimensional phenomena, and it is difficult to quantify the loss of biodiversity with a single metric, but it is almost certain that in not too distant future, biodiversity will play a larger role in the supervision and evaluation of businesses and banks. Therefore, I encourage my panelists today to take this challenging topic and discuss where we are in terms of biodiversity, in terms of addressing biodiversity risks in financial systems today. What are the facts? What are the current activities at the EU level and globally? What should be done next? And I think the most importantly, considering the audience that we have present in today's conference, we have policymakers, we have CEOs of banks, we have general society, we have businesses present, what it all means for them and what will the future bring to them. So by setting this stage, I would like to pose my first question to Professor Daly, Gretchen, as we agreed to call each other in names. The scientific community has reached a consensus that the environmental degradation, which includes the loss of biodiversity and ecosystem services, are even more severe threats to the planet than humanities and climate change. Of course, there is also a skeptical side saying that changes in the kinds of ecosystems have been happening over centuries and it's part of a natural life cycle. Why are scientists raising an alarm? And why should we take biodiversity and ecosystem loss seriously as we have taken into account the climate change? So I will give you the chance to explore on that, please.
Great, thank you. Well, first off, I would like to say in responding how inspiring it is to come together here and to hear from many tremendous leaders in this arena. I should say personally, it's my first time in Latvia. I had a beautiful day yesterday on arrival and evening. experiencing, first off, the incredible ambition and commitment of Latvia to these causes, and also getting a taste of some of the culture we had a beautiful choir, we had an experience in the art museum and also in the museum showing the coins of Latvia over the many years, most of which feature nature very prominently. So I'm very grateful for the chance to be here, and I've lived quite some years in different parts of Europe and really appreciate the leadership of the EU through these very difficult times. And I feel that globally, EU leadership and participation of the member states with the kind of spirit laid out by the Latvian president and others is absolutely core to guiding humanity through what is in many ways just an unbelievable time. It's often hard to imagine what we face now, and I'm a mother as well of 2 teenagers, one just turned 20. I'm often wondering what to convey to them about the situation we're in. I'll convey a little bit now in the spirit of hope and working together with commitment and ever higher ambition to recognize this singular moment we find ourselves in, and very strategically and with a view of being global citizens and recognizing that we need to reach across from many different institutions and join hands to address the challenges we face, and recognizing also that we have many good models of success to build on. But just answering your question, it's incredible that, sure, Earth has been through very dramatic change since it formed. And indeed, there have been 5 previous mass extinctions in the history of Earth. The most recent, we all know fondly about the dinosaurs and how an asteroid slammed into the planet and obliterated much of life as was known back then. But basically, humanity came along at a time of kind of the highest biodiversity ever, a very special moment. We came along in terms of our civilization much more recently, a few thousand years ago, at a time of great climate stability. And we need, just like the central banking system is designed and has the core purpose of providing the stability that societies need to exist, we need stability in nature, in the whole system that we call the biosphere, that thin layer of life that uniquely surrounds this planet. We don't know yet of any other planets that have life. And yet we're in a moment when humanity is driving the 6th mass extinction. It's all in our day-to-day activities, and it is hard kind of to imagine. We all have maybe our own personal experience with change in the favorite outdoor places that we might have enjoyed when we were young, changing. But when you add it all up, it is very dramatic, and we're seeing basically human activities driving biodiversity to the lowest point ever and a low point ever imaginable. And that has tremendous implications. And many people worry we're actually on a suicidal path. We're so deeply embedded in the biosphere, and yet at the same time so blind to how much we are a part of nature. Indeed, much of our bodies, 10 times more cells in our bodies are non-human, as are human. And we depend for our health and well-being, mental and physical, on that integration, interbeing with the biosphere and these many microbes. And then out in the world, we depend on nature for all of these life support services like flood control or climate stability is a core one, maintaining water quality for industry, for drinking, for irrigation, for hydropower. maintaining a supply of pollinators to service all of our most nutritionally important crops depend on these nearly invisible little pollinators coming out, often from forest or from other habitats alongside farmland, to produce the fruits, nuts, vegetables, and other things. All of this together adds up to incredible values from nature that are missing from what we normally track or quantify and use to guide our policies, our financial investments, the ways in which we think about even production systems like farming. We tend to think about farmers as producing a few commodities, or foresters, as producing wood. And yet the people with the expertise to steward landscapes, and similarly in lakes and other freshwater or marine systems, those stewards of the biosphere produce so much more and need to be incentivized and otherwise basically rewarded for maintaining the production of our basic envelope of a livable biosphere, that all of these services that we depend on. So through the tremendous work of the others here on the panel, Frank and François and others in the whole group of us here, we need to connect more to reveal these values of nature. There have been tremendous advances that we can get into in a bit in doing so, and to bring them into the heart of our decision-making in policy and planning and finance and in the operations day to day to make it all work. And I feel hopeful that we can do that together, but it will take the togetherness.
Thank you, Gretchen. So you made a very nice link to both gentlemen. So I will proceed with the question to Governor Villeroy, and exactly ask this question. Like we heard from President Lagarde that climate risks are deeply embedded now in the activities of the central banks and also the European Central Bank and beyond Europe, in institutions beyond Europe. So why should central banks and the financial sector care about biodiversity and ecosystem services in addition to climate-related risks? So, and how are the banks exposed to the natural environmental related risks? So I would start with you, Governor Villeroy.
Thank you very much. First, I completely agree with everything what Gretchen just said. As a citizen, I happen to be a father too, and even a grandfather, as old as I am. And so what you said about the importance of biodiversity is obvious for me. That said, the question of central bank is very relevant. And there were probably doubts some years ago saying, okay, we understand, and we also financial system, why we should care about climate risk. We don't understand yet why we should care about biodiversity. I think this time is over. We must acknowledge we still have a problem of metrics, and we will probably speak later about it. We lack data, and we are not as advanced on biodiversity risks as we are on climate-related risk. We lack a single metric, for instance. We are also less advanced about the link, the causality between the physical losses and transition losses and its economic and financial effects. But these effects exist, for sure. And this is my message this morning, so I will only quote some examples and some figures. They are partial, but they are telling. First, we use now to acknowledge the value of biodiversity through the so-called ecosystem services. And many are probably familiar with this approach. There are, let's say, 18 categories of ecosystem services which provide basic but essential goods, such as food, wood, water, but also regulation services as climate regulation, water purification, etc. Among these 18, 14 of them have declined since 1970. And this is a first and very significant alert. If we try to give economic figures, I will do it with caution, but I will quote various studies. All of them, they are not completely convergent. They don't agree on the precise figures, but they give the same message. The first estimate is that more than half of global GDP, so that is to say $44 trillion of economic value generation, is considered to be at present moderately or highly dependent on these ecosystem services, more than half of economic GDP. Another estimate is that the total value of these ecosystem services, which is for free at present, so which is not included in global GDP, the total value we consume almost for free may amount worldwide to more than annual GDP. And to give a precise example, if I look at one of these ecosystem services, a partial collapse of pollination, wood and fish provision would cost 2.3% of global GDP annually by 2030. And this is an estimate by the World Bank. So it matters for economic production, it matters for economic growth, again, even if we lack a single data. And because the financial institutions support the development of economic activity, our financial system is clearly exposed to biodiversity loss. Do I still have 1 minute in order to come back to what you mentioned in your introduction, which is a link with climate change?
Please.
And I think this is very important. Obviously, we are more advanced on climate change. We are probably 5 years ahead or something like that. But we should follow the same roadmap, we'll come back to it, research, analytics, data, and action. But there is a very delicate question about the link between climate change, biodiversity, and other nature-related risks. And we still have problems of definition, let us be honest. We are sure there are interactions between climate change, biodiversity, and other nature-related risks. But this interaction raises, and I don't know if Frank and Gretchen will agree, raises, let me say it frankly, a sometimes very hot political debate. There are some who say we should completely put the priority on climate change, and we will care later about biodiversity because we know less. The emergency is the priority, is climate change. On the other side of the spectrum, there are say, and I sometimes quote the example of the former American administration, which I hope will not be the next, but it could be the case. And they had a tendency to say, why do you focus on climate change? There are many other environmental risks, and we should have the holistic view before putting anything into action. And let us be clear, this was a reason to delay any action on climate change, but it was a very political view. Just to give my personal answer to that, I hope we can come to a holistic view in the future, because obviously there are interactions, interlinks, as I said. But I think we should have a pragmatic approach and having a gradual progress. The first priority is obviously climate change. And we must act decisively, as you said, as Christine Lagarde and Frank probably will repeat. Then comes biodiversity, which is at an intermediate stage, and there is no reasons to delay. But we must acknowledge we are a bit behind. And then as a third circle, so to say, other nature-related risks. So let us try to have a holistic view, but we shouldn't wait to have this holistic view before acting decisively on climate change. I hope I was clear on this very delicate political question.
Well, I will validate that with the other two panelists. Was it clear? And what are your immediate reactions to what Governor just said, Frank?
Well, thank you. Thank you very much. I will certainly address that. But if you allow me, there is one other thing I would like to say, which has only remotely to do, but not completely nothing to do with what we are saying today. A long time ago, the former president of Ireland, Mary Robinson, she told me that you should never be on a panel where there's not at least two female participants.
We are on equal terms today.
So I thought, and so I'm happy here. But then today, for the first time in my life, but this must have happened to you many times the other way around. But I saw that I was announced as Miss Frank Elderson, and I must say, I think that is a great honor. So. Of course, I sent a little picture to my two 20s daughters, and they are laughing out loud, as they say. But there is a link, and that's why I dare say this, and the link is that actually there is research, not done by the ECB, but we might do some of that, but there is research that more diverse banking boards, and actually also more diverse banking boards in terms of female and male, actually do spend more time and effort on climate and environmental related issues. So diversity is very important for many, I would actually say all subject matters in the financial sector, but also the matter that keeps us here today. So you asked me to maybe already now, it's a panel, isn't it?
Yes, it is. We're having a conversation and a dialogue.
To react to some of the things I've heard, and I thought of some things that I wanted to say anyway, but let me just start with reacting to some of the things. Professor Daly, the question, you said in a very, almost matter-of-fact way, and of course you are here, the academic, so it's very good that you speak matter-of-fact way, but you said some very chilling things, didn't you? I mean, we are talking about, mass extinction, human-induced mass extinction. I mean, think about it. You said, this very thin layer of the biosphere, and I always try to imagine, you see these images of people trying to get all the way up on the Mount Everest, and so what is it? This is almost 9 kilometers, and they can hardly breathe. Now, if you picture these 10 kilometers, let's put it 10 kilometers, and you walk normal speed, it's 2 hours of walk. That's it. That's what separates us from where we live and the completely unhospitable, unlivable area outside. Those 20 kilometers, 2 hours of walk. So that's what I think when I hear you talk about this and how delicate all that is. On François' point, I mean, I could not agree more that we need to think holistically. It's very simple. And let me take here a banking supervisory point of view for a second. All banks need to manage all their material risks. That's it. That's already in the law for decades. You need to manage all your risks. And by the way, if it was not in the law, if there were no supervisors, you would still have to do this. This is what a banker does. Manage all your material risks. Now, what we cannot do is to say, you know what? Some of these material risks, they come later. Think about them later. We just hope that nothing materializes. That is just not possible. So once you understand that there are certain sources of material risk coming onto you, you just have to, whether you like it or not, as a banker, you just have to manage them. So yes, I agree that we need to follow the same roadmap, but we better be very quick. We better be very fast, because even on the climate issue, one could very well argue that we are very much behind the curve, also in terms of the risk management. Not just as humanity more generally, but also as a financial sector. So if we are behind the curve in climate, but now catching up very quickly, then all the other sources of material risk, and indeed biodiversity loss is one of them, nature-related more generally, water scarcity, and what have you, these are sources of material risk as well, and they need to be managed as well. So I took a supervisory point of view because François, my good colleague here, already mentioned some of the more macroeconomic aspects. So that in reaction to some of the things
Right.
I already heard. So you could ask, why are central banks and supervisors so much in the midst of this debate? Shouldn't elected officials take the lead? Should they not make the policies? And the answer is a very simple yes. Elected legislators, governments, they are in the lead. They sign and negotiate and sign the Paris Agreement. They drive the COP 26 and of course now 27 and of course also on the biodiversity side. They set deadlines. They say net zero by 2050. They say 55 package 55 ready for 55 by 2030. That's not us. We are not policy makers, at least not in the climate and biodiversity sphere. But we are policy takers. We look out of the window, we listen to the facts as academics put on the table, and we have to translate that squarely in our mandate. And that is something now that is no longer controversial. The sentence, climate-related, and now I add, and environmental-related risks translate via two channels that I will explain in a second, but to just not make the sentence too long. Climate-related and environmental-related risks translate into financial risks, and hence are squarely part of the mandate of central banks and supervisors. That sentence, which we put in our first progress report as the Central Bank and Supervisor Network for Green the Financial System already in 2017, or 17 we started, and then this first report was in 18. That sentence, at the time, signed up by, the then, I think when we published that report in the spring of 2018, we had like 18 members, something like that, 20 maybe. Now the NGFS, 121. 121 central banks and supervisors around the world have signed up to that insight. Climate and environmental related risks translate into financial risk, and hence they are squarely within our mandate. That is no longer controversial. So when I say it's part of the mandate, it means, if you look at the other way around, that if we were not to act on this, we are not in compliance with our mandate. So the question no longer is, why are they active in this field? The question is, are they active enough? And are they effective enough? And there might even be legal risk around all that. So that is one thing. It's now no longer controversial that we need to do this. Translating this, and this is how you hear me saying this, translating this into our own mandates. And when I say mandate, because of course that is a very, let's say, a very conceptual word, very legal word, but it is all the things that we do. So as a banking supervisor, but also in our monetary policy, in our macroeconomic modeling, in our statistical work, in our economic research, in our speeches, and what we do internally. So we need to be holistic and translate what's happening out there, which is huge and scary. By the way, let's not forget that there's also another side of that coin. There is trillions of euros and dollars being invested in the green transition. So there's lots of money to be made there. You want to be part of that. You don't want to be stuck in the 19th century. You want to be part of a vibrant part of the 21st. So there is lots of benefits to be reaped also from this transition. But I don't need to explain that to bankers. One word on how do these climate and environmental related risks translate into financial risk. Normally what we would do is to identify two channels, if you like. The physical channel,
Right.
which is maybe intuitively the easiest one to relate to. Droughts, fires. I think the president of the ECB this morning gave the example of the Rhine River. You could almost walk, I think, at some points to the other side. I would have never thought that I would see that. I'd see that in Spain, but I've never seen this here, in Frankfurt, I should say, in Germany. So these are physical manifestations. And of course, on the biodiversity part, you know, you could imagine many things, and you mentioned some of them already, as did François. To just give you one example how this translates for a specific bank, you know, when I was still at the board of the Dutch Central Bank, one of the Dutch banks is big in agriculture. And they were looking at, you know, many of the loans to farmers, and they were concerned about pollination. Because there had been academic research that showed that the amount of insects in the Netherlands and Germany over the last, 10, 15 years, had decreased by, you know, a staggering 90%. So if that leads to less pollination, if less pollination leads to lower yields and lower harvests, that is not good for the income level of the, you know, of the farmers involved, and therefore it increases the credit risk of a bank. Now, this is one causal chain, if you like. There are thousands, maybe tens of thousands, but what we need to learn, and that is what I say is why this is the bread and butter, if you like, in the end of risk management, is how this works. Another example, if lots of your exposures are to firms that are in areas that are adjacent next to protected areas, and governments have committed to make such areas bigger, you know that you have a concentration risk of many of your exposures, as maybe these firms will have to, you know, to move out of these soon-to-be protected areas. And there's many other examples. So these are a physical. The pollination is a physical risk example. The example I just gave is an example of what we call transition risk. Governments not just sitting idly by, not sitting on their hands, fortunately, but making policies in terms of environmental protection, in terms of phasing out diesel cars, in terms of phasing out coal. These create deadlines, and these deadlines, which are very necessary to combat climate change and to combat biodiversity loss, at the other side of the coin, create transition risks for the financial system, which must be managed and can be managed. This is the other channel. So you have the transition risk and the physical risk channel leading to financial risk for the financial sector. Now, and then I stop because you told me not to be too short. You should have never said that.
Right. I will be stopping you soon as we are coming.
Please interrupt.
But make your final notes. So.
No, so on biodiversity, I also agree with François. You know, data is always a problem. But what I tell the bankers is, you know, if there is a certain risk and you don't have data, it's not that suddenly the risk had disappeared. It just makes it a little bit more difficult to manage it. But you could even say that, you know, driving blind is even worse than, you know, if you had the data, although you didn't do anything about it, because at least you would have some advice notice. So there's no excuse. So you have to find ways to do this. And there is lots of science out there. Yes. I think also the time to market, and we talked about that a little bit before this panel, the time to market of academic insight and databases that are out there, but might not have been discovered so much by the financial sector. There, I think we need to shake hands and make sure that time to market, becomes shorter, so that financial institutions, they move from just looking at carbon emissions to also think about, nitrogen and phosphorus and other aspects of the broader environmental source of risk.
Well, thank you for making this link to the scientific world and the role of research. And as it was mentioned for several times already today, that actually the lack of a single metric and lack of, or the data granularity are really the challenges that might be one of the reasons why the biodiversity risks are lagging behind climate risks to be integrated in the measures of central banks and supervisors. So, Professor Daly, the question goes to you, is that indeed measuring the biodiversity is a complex issue, and there is no commonly agreed number that defines the limit of acceptable total biodiversity loss, nor are there universally accepted indicators of biodiversity intactness. So what are the current developments and practices to address, totally understanding that there can always be better models, better indicators, better everything, but we have to act now. So where do we stand now in these efforts?
Really excellent question and discussion. I feel this is the moment in which we need to really shorten that time to market, as Ms. Frank put it, and playing off of what Mr. François was laying out earlier. Actually, I think we're there now, and it's a matter of fine-tuning how we integrate science into the next level of decision-making and transition in the financial sector. And I'll just give an example. So playing off of what you said earlier, François, with respect to not waiting, that we need to act now, we can act now, that we know more in the climate context, but in some sense what we know more about there is the kind of engineering and more technology-focused parts of the transition, that we need to move away from fossil sources of energy. We need to bring in new technology in quite a few sectors, and we kind of know where to head there. But when it comes to the nature-based solutions side of climate, addressing climate risks, that's what brings you right into nature. And we actually know a lot there. We know, for example, that investing in forest, especially existing older forest, is the best way to help secure the biosphere and the climate system, and keeping all that carbon locked up where it is. We need to develop urgently standards for high quality, so-called forest-based carbon offsets. And politically, for in a variety of contexts, we need to take a holistic approach. Developing countries don't want to just become the offset grounds for the rich world that has, launched the Industrial Revolution and everything beyond. And so for political, economic, and also biophysical reasons, we need to bring in an integrated approach that brings immediate benefits to the countries that have, in many cases, like in the Amazon or in the Congo, the major carbon sinks that we depend on keeping as carbon sinks. We need to invest in ways that let local people realize the immediate economic benefits of those investments coming in, but also of securing their own economy, their own country, securing and improving water supplies, securing places like Pakistan from flooding, securing from many other kinds of climate risk, or the pollination collapse. I mean, it's stunning to me, to take a quick aside. I used to be the kid in the family assigned the job of wiping the windscreen clean when we went on family trips. And I grew up part of my early childhood in California, and we'd drive from the coast where I lived in the Bay Area of San Francisco to the mountains. And we drove through kind of the Central Valley, which is the breadbasket for the United States, of fruits, nuts, vegetables, rice, a lot of things grown there. And the windscreen used to just get covered with insects, and we'd stop pretty frequently, not even so much to get petrol, but just to wipe off the windscreen. today, I mean, you're lucky if you get a single bug on your windscreen, making that 2 to 3 hour drive across the Central Valley. It is shocking, and there's a lot of data backing it up, and my group works in countries around the world. This is just happening everywhere. So a total collapse of locally absolutely vital services provided by basically our brothers and sisters that we don't tend to think about, but the other organisms, the other species with which we share the planet, the machinery that keeps ecosystems functioning. And so what we can do now to get back to the point of taking an integrated approach, recently we have gotten to the point of having global environmental data in the natural capital platform, and also global models that can be applied locally to quantify the value of nature today, locally, regionally, as well as globally. But the local and regional is crucial from political and economic points of view. And we're using these tools to enable us to visualize different scenarios for the future. They're being used by the United Nations IPBES, the integrated, now I'm forgetting the IPCC for Biodiversity and Ecosystem Services, basically. We can run these scenarios and inform our policies. We can see these being used in countries, and there are 185 countries have taken up these modeling approaches. I'll give you an example from the biggest country that's implementing this all out, and that's China. They've tasted the extremes of environmental degradation, the most severe flooding in human history, the most severe polluting of land and water and air, and many other kinds of extremes. And using and co-developing this science and software, they've committed to zoning the country. They did this back in about 2015, protecting 51% of land area, defining the priority areas for maintaining the flow of vital services that François and Frank have elaborated on. So 51% of China is now zoned for regeneration of nature in order to achieve climate security, water security, security in food production, especially with a view to soil health, security in air quality to prevent sand and dust storms that affect much of the northeast part of the country. And they also have prioritized biodiversity, just all the little creatures on whom we depend, and where there's the most mystery still as to the exact role of each creature in helping to maintain the livability of our biosphere. And then China, to make this all work, is paying over 200 million people, mostly public sector payments now, to create livelihood security for the land stewards. And the stewards of lakes and wetlands, rivers, and also coastlines, to create livelihood security. So downstream beneficiaries, downwind or down the supply chain, are effectively paying these people upstream on whom we all depend for changes in their day-to-day practices of growing food or producing timber, other vital roles in society and in the economy. Those people are being paid. And then we can, if we move around to later parts of our conversation, get into how this is all being guided. It's partly through a new metric called gross ecosystem product. So whereas basically after the Great Depression, people woke up and said, oh my gosh, we're flying blind. We know so little about our economies. We developed GDP as a metric for helping to guide economic policy and investments. And similarly, we've just lived through and continue to live through the great degradation of nature. And we're just waking up, and there's a new metric that's been created by an international team. It's in the earliest phases of development, but the UN Statistical Division approved it for global use in 2021, and this metric is gross ecosystem product. So after realizing that we're unlikely to green GDP for multiple reasons, we need another metric that reflects all of the goods and services that come from nature. Some of it overlaps with GDP, but we can easily account for that. And this metric can be used as a guide to see what all the societal benefits are from nature today, their magnitude, from where they flow and who benefits from their flow. Second, we can use it to design financial investments from downstream, beneficiaries, consumers, into the supply regions that we tend not to think about so much, and the people living there and providing what could be really vital, regenerative sort of services themselves. And then finally, we can track progress and evaluate policies and the leaders meant to implement them. So we're seeing that being deployed in multiple countries now, and it's a very exciting development in time. So I think we really are there, but we need to fine-tune this all much more. We're just at the beginning of kind of joining hands across many institutions to make this transition.
Thank you for giving this very interesting example, and also the reference to gross ecosystem product as a metric that probably will be used in the future more and more and in many parts of the world. But I would like to refer to Governor Villeroy and ask for your experience, because you were doing the biodiversity-related financial risk assessment for the French financial system, and that was conducted back in 2021. And despite these limited and incomplete tailored conceptual frameworks are being developed, models are coming up, tools are being developed. So what was your experience, and what kind of metric you were applying, and what were the results? And how do these results translate into actions? Please.
No, this is a very important point. I think we must acknowledge that we still have a metrics and data challenge. It's a question of credibility, but let me be clear, it's not an excuse to wait for action. It will help us accelerating on action, but we must acknowledge that we are still behind on data and metrics. And this means that we must also accelerate on research and what I would call conceptual framing. And this is clearly one of our priorities at the Banque de France. But to answer your question, can I put on the table two positive examples on progress on matrix? The second one will be the one you mentioned on our assessment on the French financial system. But the first one is also the result of a Dutch-French cooperation. And Frank will be very sensitive to that. And it's not by chance. It's not by chance. Probably DNB and Banque de France are not the only ones, but are putting effort, energy in this research. So the first example, and I will come to the study you mentioned later, but the first example is the so-called Global Biodiversity Score. It has been developed by a French institution, CDC Biodiversity, but using a Dutch methodology, the so-called Globio model of the Netherlands Environmental Agency. And it's interesting because it tried to synthesize the impact on biodiversity into one metric, the so-called MSI per square kilometer, MSI meaning mean species abundance. And the figures are telling. if I look in 2010, losses of MSA were equivalent to 32% of biodiversity globally since the start of history, so to say. 32% in 2010, and the estimate for 2050 is that such losses could increase to more than 40%. In the estimate, they did 41.5%. It's perhaps too precise, but more than 40%. So such aggregated metric is not a silver bullet. There could be other thermometers, but it helps us to better understand how these issues are material. I come to the second example of Dutch-French cooperation, which is this study you mentioned. We at the Banque de France have run a study last year, but we have built again on a pioneer methodological work at DNB, a Dutch national bank, which was, Frank, if I am right, 1 year earlier, so 2020, and under your sponsorship, if I can pay tribute. We call this study a silent spring for the financial system, and we try to identify risk factors specific to the economic sectors which were covered by the studies. This is to say all the main corporates which issue securities held by French financial institutions. And we try to disentangle physical risk and transition risk in the spirit mentioned earlier by Frank. Physical risk, we defined it as dependency on ecosystem services. And here we have an interesting figure. 42% of amounts in the portfolio held by French financial institutions are issued by companies that display a high dependency on these ecosystem services, which I mentioned earlier. You might be interested in what are the main ecosystem services which create this high dependency: water supply, and regulating services such as erosion control, flood and storm protection, and yes, climate regulation. Then I come to the transition risk, and this is reverse, so to say, the biodiversity impact or footprint of companies on biodiversity through their direct activities or their upstream value chains. Here the figures are quite telling too. The terrestrial biodiversity footprint of the portfolio of French financial institutions, cumulated over time, was comparable to the loss of at least 130,000 square kilometers of undisturbed economic surface, or we could say that it's a complete artificialization of 24% of the surface area of France. If I am in regard still more concrete, it's twice the surface area of Latvia, which through the upstream impact of French companies could have been cumulated over time, fully artificialized. I think this is very telling about the stock effect. By the way, the flow effect each year remains unfortunately significant. What is, again, the main reason or the main trigger of this stock effect? It's mainly land use. And clearly, artificialization diminishes or destroys biodiversity. But if I look at the flow effect, so the annual additional impact each year, climate change is the main factor explaining the additional impact. I will stop there. Again, this is also another study which could be discussed, contested, etc., but which we presented in many international fora, and I think which is very useful, which could be used by other central banks. It's not because we don't know that we don't have to work. It's exactly the contrary. Because we don't know completely, we have to work more actively. I'll stop there.
Right, but I have one clarifying question or additional question on these
Please.
very interesting and starking results, as you said from this research, is what will happen with those results? How have you started acting on them? Because it's really like a very strong message that can be conveyed to other central banks and countries. But I'm very curious on what has been the fate of these results, of this finding.
First, it was a Banque de France work. I wouldn't say it was a shared study with financial institutions. But obviously, we discussed the results with them, and they were not significantly contested. Then we impose in France, and this is a very pilot experience, we impose in France now to financial institutions a reporting, a public disclosure of their biodiversity risk. This is Article 29 of our climate law, and this is very innovative. Now, I must confess that it's not yet completely obvious for financial institutions to report in an harmonized manner, because again, we have this problem of metrics. But we will test and learn together. And I think this is our strong common message this morning. We shouldn't wait to be completely sure about the data, the metrics, the definition of each item to start disclosing, working. But we have to work still more.
Thank you. Frank, I would like to proceed with a question to you, since you have been the founding father of the Network for Greening Financial Systems, which is the network that is operating globally. And if you could share what are the activities at the NGFS and why was it established, and so what are the current, let's start with why. Why was it started, and that it's just an example demonstrating that the activities are much broader, in a much broader geographic scale than.
Thank you. You're being very kind. But the NGFS has more founding fathers, and here I really should also.
That's why I said you were one off.
Yes, exactly. And mothers, by the way. Here I really should also pay tribute to the Banque de France. It was an initiative of the Banque de France, and actually also now still the Banque de France is hosting and very actively contributing to the secretariat of the NGFS. But it is true that I was there as the first chair for 4 years. Now, a couple of things there, maybe not to just sing the praises of the NGFS, but I think there's two key messages around it that I would like to highlight here. The first one I already made, and I will not dwell upon that now. In the earlier in this panel, when I said that this is no longer controversial, that this is part of our mandate. The second message, which is closely related but slightly different, is this is here to stay. This will not go away. And when I say this, I mean central banks and supervisors playing a role here, understanding in increasingly more granular ways how this needs to be incorporated in all our activities, visiting the banks, challenging the banks, making sure that the financial system is resilient to climate and environmental risk. So it's no longer controversial that we do so, and it is here to stay. And it will move, and it is increasingly moving from what is still a informal gathering of central banks and supervisors, the NGFS, because you asked me about the origins. The origins were just 8 central banks around the world, in Europe, but also already at the very start, for example, the Central Bank of Mexico, the Bank of China, the Central Bank of China, but also the Moroccan Central Bank. So we were already from different continents, but now, as I said, 120 members. But an informal gathering. Why? Because the existing fora, the Basel Committee on Banking Supervision, the Financial Stability Forum, they were at that moment not yet moving. So it has also been, if you ask me about, what has been the role has been to together learn in a relatively safe environment. Nothing that we decided there was immediately formal policy. And that's why we could make so much progress. But these same institutions that were around the table on a Monday in the NGFS would meet the next day in the Financial Stability Forum, in the Basel Committee, on the Governing Council of the Central Bank, on the Supervisory Board of the European Central Bank. So it was impossible to unlearn what you had just learned together in the NGFS. By the way, the NGFS surrounded by a whole network of academics. There's an Inspire network which brings together great research institutions around the world that is actually sitting there and very actively sitting, by the way, but waiting for research questions coming out of the NGFS that are then being addressed and being fed in back in the NGFS. So again, a learning experience, a catalyst that's way before the official fora. We're thinking about environmental and biodiversity loss within the NGFS. And I have a whole list here of activities and reports, but I think it's a little boring if I go through those. But go to the website and you will find all of them. But way before the official fora were doing this, the NGFS has done work on this, way before the European Central Bank still being, very much being a leading central bank, also on the monetary policy side, but there was work in the NGFS before that. So it laid the groundwork, if you like, for that work. So messages, again, it's no longer controversial. It's here to stay. And by the way, I should say here, looking here at my good friend Mārtiņš, that the Central Bank of Latvia, of course, plays a very active role as one of the early joiners of the NGFS, and of course also within the Governing Council of the European Central Bank and the Supervisory Board of the European Central Bank.
Well, let me refer to Governor Villeroy, because as you said, the Banque de France has been actively participating in the activities of NGFS and was also standing behind the cradle of this network. So from your perspective, Governor, what are the activities that you would like to highlight that NGFS is currently doing to tackle biodiversity loss and nature-related risks?
No, first, thank you very much to Frank for his kind words. It's an excellent example of cooperation. And by the way, I take a broader lesson from that. It's a new field for us. It was climate change, now it's biodiversity. It's not the usual way of working, which was probably more certain, more top-down, etc. We work together, we test and learn together, and including with financial institutions, and I think this is the way it should be. The NGFS was created as a coalition of the willing, at the time where, unfortunately, the US in 2017 left the Paris Agreement. We were very enthusiastic. We are still. We have more than 15 people committed in Paris for the Global Secretariat, but we learned exactly in the way Frank described it, a new way of working together, including with the Latvian Central Bank, with financial institutions and with academics. Perhaps to add only one thing about NGFS, we just created last spring, under the new chair, who is Frank's follower, Ravi Menon, the president of the Monetary Authority of Singapore, and it's not by chance. It shows the global reach which NGFS has now reached beyond Europe. We created, under Ravi's chairmanship, a task force dedicated to biodiversity loss and nature-related risk. And again, don't think that it's only for Dutch and French central banks, but it's co-chaired by two women, Dutch and French, coming from DNB and Banque de France. They have a 2-year timeline, which can seem long, but which is really demanding, to elaborate on a unique conceptual framework on biodiversity risks in the same spirit as we now have on climate. I strongly hope we can have deliverables during these 2 years, intermediary deliverables, but believe me, it's very ambitious. I can add one last point, which is another sign for hope. We didn't mention yet the TNFD. Everybody knows the TCFD, Task Force on Climate-Related Financial Disclosure. TNFD is in the same spirit, Task Force on Nature-Related Financial Disclosure. It involves the private sector, and it's delivering a good job. I strongly hope we can make progress in the COP15. It's the other COP, as you know, on nature-related risk. It's less visible and probably less communicated than the task force, the COP on climate, which will gather in Egypt. But it's very important. And I strongly believe in the potential of TNFD in close relation with NGFS.
Thank you. So basically what we have covered is that we have tackled a bit of the facts where we stand today and what are the current activities going on in Europe and also globally. We are gradually moving to the third part of our discussion about what should be done next, and I can see also that there are questions coming in from the audience on what about the real actions and how to turn different kinds of strategies and research findings into real actions. So my question will go first to Governor and then to Frank. So what tools do central banks and supervisors have at their disposal to practically contribute to the protection and restoration of biodiversity and ecosystem services?
I don't know, Frank, would you like to start first?
Yeah.
Because I was the one who spoke first in previous opportunities. So,
so you have a very good cooperation,
no,
so I cannot interfere.
To show you that we work in an excellent cooperation spirit.
This is Governor, I was just commenting that I cannot interfere into your very good cooperation. So Frank, would you step in then?
Well, if you really want to, because I've learned that, you know, the
That's
moderator
fine.
is the boss.
No, go ahead.
So I'm in your hands.
Go ahead.
Okay. Well, you asked what we are, what should be next. In order to I will tell on that in a second, but I need to go back 2 years to lay the groundwork, but I will do so very quickly. So in terms of supervision, so let me now talk about ECB banking supervision. We came with a guide on climate and environmental related risks in the end of 2020, with a lot of recommendations and expectations. We call them supervisory expectations to the banks. And then we have a multi-year strategy that we just stick to doggedly. So we came out with the expectations. Last year, we asked the banks to self-assess. And when I say the banks, I mean all the banks that are under the direct supervision of the ECB. We could have taken a sample, but we took all because we think it's very important that everyone is, you know, is being invited, if you like, to really look at this. The self-assessments were seriously done, because all banks filled them out, and they actually came to us saying that, you know, there was still a long way to go in their own view. So I have complimented banks many times publicly for having been sincere there. Now, of course, that is good to be sincere, but the gap to be bridged is still there. So we asked all the banks to come up with action plans, concrete action plans, how they thought they could actually bridge that gap. That was last year. But of course, we are supervisors. So we don't do things just on the basis of self-assessment by the banks. We go in the banks ourselves and we check. So this year we did systematic review, referred to it earlier, and yesterday we came out with that, and what have we seen? We have seen progress, but not enough. So the way I put it is, if you look at a glass, people always ask, is it half full or half empty? There's still a little bit in that. I would say it's a little bit more than that. So it's filling up, but it's not yet even half full. So there's a lot more to do. So the messages that we sent yesterday was, it's very good that most banks now actually have started on this journey, but it is important that they speed up. We set a deadline by the end of 2024. It sounds a long way, but it's not so far. We want full compliance with all our expectations by all banks. And we set intermediate deadlines, because I'm always a little bit suspicious of people proclaiming very proudly that by 2050 their balance sheet will be completely net zero, or economies will be net zero. That's all good and well. But you know, if you're a bank, 2050 is, what is it, 5, 6, 7 CEOs down the line. The question is, what will you, as CEO, do tomorrow to make sure that next year you meet your first intermediate deadline? So we set intermediate deadlines for all different banks, and because we look bank by bank. We are not a regulator, we are a supervisor. So we look at the granularities of each bank, but the end result must be full compliance with all banks, with all expectations. And we added one other message, which is serious, which is that if need be, we will enforce this. So this is where we are looking forward. And all this is climate and environmental. Now, it's not just the strict supervisor not smiling, coming in, setting deadlines, enforcing, etc. It's also a supervisor that wants to help. Because we have a privilege. We have the privilege that as a supervisor we can look into the kitchen of all these banks. Banks, of course, cannot look in each other's kitchen. They might want to do that, but they cannot. It's, of course, a free market out there, but we can. And we see good practices. So we published yesterday also a report with good practices, inviting banks to learn from each other, of course, on a no-names basis. And there's good practices, not just on climate-related risks, but also on biodiversity-related risks. And that's why I'm saying that we shouldn't be too shy in saying, well, let's not do too many things at the same time. We see banks that are actually able to already also in the biodiversity sphere to make significant steps forward. And last thing on this, it's not just some banks of some business model in some jurisdiction. We see good practices in small banks, big banks, different jurisdictions, different business models. So it can be done. So all we now need to make sure is that we don't have scattered around good practices here and there, but that each bank's, if you like, stealing from the good practices that we put forward and which we will be updating in the years to come, makes that progress.
Thank you.
Maybe if you give me one more minute.
Yes.
This was the supervisory side. Of course, on the monetary policy side, the President already spoke this morning. There, we have committed to periodically look whether our package of measures that we have now agreed on is still fit for action. So there is a revision clause. There was a press release with which we explained to the world the package of activities that we now are pursuing, of which indeed the tilting of the corporate bond portfolio is a highlight, but not the only part. But we have also said that we could revise and step up. And one of the reasons why we could do that, and that is specifically in that press release, is to also incorporate environmental aspects.
Thank you. So, Governor, the question was posed to you, but now hearing what Frank said, so what are your immediate reflections or something you want to add?
No, perhaps just to complement what Frank just said. We cannot do everything as central banks and supervisors. And as you said from the introduction, the commitment from public authorities is very important, and especially from European authorities. I was grateful to Gretchen when she stressed the European advance in that field. I don't know if everybody is aware of some biodiversity commitments of Europe in the context of its Green Deal. 30% of land and seas turned into protected areas, 30%, 30. 50% reduction in the use of pesticides, to give only 2 examples. What can we do as central banks and supervisors on biodiversity? I would quote 3C to be very simple. Cooperation, we mentioned NGFS and TNFD. conceptual framing and research, and believe me, this is an acute priority and a strong investment from ours. It's not blah, blah, blah. When we speak about research, it's really an imperative on data and metrics. And the third C would be contribute. And this would be in the spirit of national pilot initiatives. To give two examples in the French case, I mentioned this compulsory disclosure of biodiversity risks for financial institutions. I think we are the first country in Europe or worldwide to have this obligation. And it will be difficult, demanding, but we will test and learn. And second, another example which was not yet mentioned about our non-monetary portfolios. We introduced at the Banque de France in 2020 two biodiversity-related indicators for the equity components of our own funds and non-monetary portfolio, a biodiversity impact score, and an indicator of our exposure to companies producing chemicals. And here we compare with the previous year, and we must improve, and we compare with the benchmark. We will go further in the future. We will go, I am sure, about biodiversity-related risks to monetary policy and to prudential requirements. But let us acknowledge we are not yet there. When I look at what happened on climate, which shows us the road, I am optimistic for the future. Obviously, and Frank said it, and I agree, we still lag behind on climate. But our acceleration was really impressive. Let me stress that. If you look 6 years ago, on disclosure, it was really fragmented and very partial. Now, almost all important companies have voluntary disclosure, and it will become mandatory in Europe. On stress tests, climate-related stress tests, we were nowhere 4 years ago, really nowhere. And now, France, the ECB, and most important jurisdictions, including even the US, will run climate-related stress tests using the NGFS macro-financial scenarios. On monetary policy, let me quote the example Frank just gave. If we had spoken, Frank, of greening the monetary policy probably 3 years ago, many people would have laughed. We are not only speaking about it, we are delivering it. And this is the very important result of our strategic review with Christine Lagarde, and we will implement in due time. It will come for biodiversity risk. It will come a bit later. It's also, it will be accelerated by our research, but I am really confident that we will deliver.
Thank you, Governor Getjen. I will pose the question to you now, the one that I've received from the audience. So we heard about the challenges related to data, but nevertheless the activities are taking on and continuing. Nevertheless, so can you please comment more on what needs to be done in the near future? And this near future is really underlining all the questions that I've been receiving to increase the quality of the data that is used for policy making to make more informed decisions. So how do you, as a scientist working with the project on a global scale that you said is really based on data, so what do you see in as developments in the future?
That's a fantastic topic to open up, so thank you, whoever put that through. And I'd like to address it by saying first off that everything that François and Frank have noted resonates perfectly with me. Sometimes I feel the science community has a lot more data than we're seeing being taken up. And that's understandable. Maybe an analogy is in health and medical care. We have a ton of medical research. There's all sorts of data being used, but it tends to be kind of partial for building the evidence base and the knowledge foundation, and basically like these causal chains that Frank, you mentioned earlier, linking change in climate or change in nature to impacts on the financial system, the economy, on people's lives and security. So we need to move from all of that, say, medical research type arena to really practical implementation, standards, strategies, approaches, and how do we do that? And in the context of data, I'd say the aim of the science community is to work with and for decision makers. So it would be the most helpful thing is to have the NGFS, the Task Force for Nature-Related Financial Disclosure, and others indicating what's most needed. We're all in different parts of this extremely complex and adaptive system that we operate in, of so many institutions trying to link up. And I feel that we could bring the data forward if we knew more specifically what was needed. And I remember in President Lagarde's comments too, saying, well, we're not going to have ever just one metric. We need different metrics for different purposes. And getting more clear on what's needed would be really helpful. From the natural capital project perspective, we've basically seen an arc of engagement with different parts of the systems, where initially the science was advanced for countries whose governments were, for reasons of desperation or enlightenment or some amazing combination thereof, requesting engaged co-development of science, data, and tools. And then cities have come along and really wanting this as well, as we can all feel, especially during the pandemic times. Many cities have far too little nature. They feel more like a cage when we're locked up under pandemic conditions, but it's made people so aware of the physical and mental health dependence on even small elements of nature. Then we've moved just historically in this arc ever more close to public financial institutions with central banks, and globally it's other public sector banking institutions, especially the multilateral development banks, committing to and advancing these causal chains for informing and guiding and kind of standardizing decision making. And now a key frontier that we haven't gotten into much is private sector banking, and that's where it's so exciting seeing demand by, for example, SEB, a Swedish bank that has a scientific advisory board, guiding this pursuit of data to inform the kinds of decisions that private banking sector makes. So in all of it, I feel like data is not actually the limiting thing. We have so many new technologies for acquiring data, so many different sensing systems, and those could be rapidly innovated and advanced to answer key questions, but knowing what the key questions are and kind of going back and forth on that. It's not a one-way thing, but understanding better what the part of the system is among those like fully activated, like the people we're seeing here. Those who understand enough are activated. The more there's clarity in what's needed, the more rapidly we can supply data and provide it in the context of tools to guide decision-making, the better. And I think there's a ton out there. It just needs to be connected more effectively.
Great. An additional question is it worse to have a single composite metric instead of specific indicators if actions should be taken across a number of areas impacting biodiversity and climate? That is another question.
That's a great question as well. I feel that there are roles for high-level indicators, but at the same, like GEP or other high-level indicators that have come up here that are being advanced by the NGFS and the TNFD and other groups. At the same time, it's really helpful to have, as both François and Frank have noted, more specific indicators. So it's just like with health. You take your blood pressure, there's certain, you take blood samples, there's certain high-level indicators of how the human body is doing of well-being. But when it comes to diagnosing the problems specific to given situations in countries, for example, we need many other types of indicators at our disposal, and we need a common understanding of how they work. We need to build capacity in all these institutions to access, and understand those other kinds of indicators. And that's what's being advanced through the science. So I do think there, in a way, is a great path ahead of us for partnership, and the science community is so many people, especially you look at the young people. I mean, I could sort of cry over this. I'm a very empathetic kind of person, and the students I have are desperate to act. They want to take the science now and put it into practice yesterday, and they don't want this problem being put on like the back burner, and they want it solved now, and they want to contribute. So there's much more than we had in the past, people being trained to think in a very systems view, learning aspects of business, aspects of banking, say, aspects of law and governance, and wanting to bring all this together. And then, like in my ecology classes on valuing nature, I have mostly students from engineering, business, law, kind of behavioral dimensions, institutional transformation, just so many areas wanting to get answers. So I'll end just saying, I think we can do it, and the time is now, and this coordination and the various C's that François was putting out, we need to bring all that together, and having leaders play that role and guide the change is really crucial.
Thank you. As we have last few minutes left for the discussion, and I want to raise the last question to all of you, and maybe we can just answer one after another, is, so what would you give as the final message to the businesses, the entrepreneurs, who are the bank customers, in relation to environment and biodiversity risks? Because we were giving sort of messages to policymakers, to governments, we were discussing cooperations with academia and a lot from the central banks and supervisors. But from where you stand today, so what messages would you convey to businesses? And maybe we should start this time with Governor.
No, we already gave many messages, and they were not only for public authorities, they were also for business. But if you allow me to take your question and to have almost a philosophical remark, but it will be also practical because it's consistent with our economic interest. My philosophical remark is this one, taking the very long view. We have lived through centuries where economy was disembedded from nature. If you think at the start of the financial system, some centuries ago, finance, bank loans was linked to agriculture and was linked to the seasons. But we have separated them for more than decades, centuries. Now it's probably time to re-embed economy into nature. We have a nice expression in French, sorry to speak French, which is art de vivre. In English, probably way of life. But as we are more romantic in French, we say not way, we say art. Art de vivre. And art de vivre is some harmonious combination between human activity and nature. We forgot about that. But this is really what is at stake. And it's not only about the quality of life, it's not only about spiritual harmony, which are strong values. it's also about our long-term economic interest. And this would be my message, again, not only to business, but to everybody in the audience. It will take time. Let us be clear. It will take hard work. But this is one more reason to start soon. This would be my message.
Thank you very much. Frank?
You asked about businesses, but I agree with François. Maybe we should talk more broadly. But actually, I want to say something about maybe those who are here in this room who are not bankers, not businesses, but just Latvian citizens. And I asked you about it this morning, and I said, so if you ask the average, what is your sense, and you are very much in the midst of the society, what people worry about, are they worried about the climate, are they worried about diversity, biodiversity loss? And Gretchen, you said that yesterday you saw coins with lots of references to nature, and I know of the wonderful nature of this country. So when you put that on your coins, it's a really clear sign that this is important. Nevertheless, you said, of course, in times of high inflation, in times of war, people tend logically to put other things as their priorities. Now, this morning, very early in the morning, I had time to walk around a little bit around the wonderful city center. And I stumbled on a little square in front of the War Museum. And there was a destroyed military vehicle that had been brought in from Ukraine. And I was looking at that, and I thought there is a link. First of all, the fact that it's strange to be talking here about biodiversity and climate and not have one reference at all to the terrible war waged by Russia on Ukraine. But second, because there's a link in terms of that the probability of the energy transition going to be taking place, in my strong conviction, has increased. Because we now understand that we need this transition not only to have an economy that is embedded, I love the expression, in nature, but also to make sure that we have energy independence. So these two causes now shake hands. And that is relevant for today's discussion, because if the probability of this energy transition, and if you like, the more environmental the transition, if the probability of that taking place increases, that increases transition risks and brings us where we were here before. So that would be my message again to all of us in whatever capacity you are. This is here to stay. This will not go away. Governments will make sure that we do the transition. The financial system needs to be resilient to this. The financial system needs to contribute to it, and it needs to reap the benefits from it. And we can do so, and we will have to do so.
Thank you, Frank. And finally, Gretchen. So
It's
what
hard
is your
to
key
close
message?
after those really powerful final remarks. But I'll build on what you're saying and just reflect also more at a broader and maybe somewhat philosophical level, that we can see ourselves needing to enter and beginning to enter an ecological civilization. That's kind of the next stage in the evolution of human societies if we are to survive. And it involves transformation of many systems across the economy. We can think that way, or we can also think about, as global citizens, many systems of how we cooperate, and becoming, that's another key frontier. How do we, referencing the Ukraine war and many other struggles, how do we advance our civilization to become more cooperative? And part of that then, to close, is also thinking about looking within. How do we advance our own orientation to reawaken the many connections that we've had in our traditions, in our different cultures, and within our own family lines and personal histories, our connections to nature, and kind of recognizing our interbeing, our connections with not only all of the brothers and sisters out in the natural world, but in human societies, and the fulfillment that comes from that. How do we reignite that connecting to the biosphere and the many beings with whom we share this incredibly precious moment of life, in our children, in young people growing ready to join the workforce and join in driving the change we need. How do we embark on that together? It's a really beautiful moment. There's some very scary dimensions to it, but in a way it's a time when we can all play a key role, whatever our place in our own path in life, in igniting social innovation and thinking about a future that we would love to leave for our children and grandchildren. So I thank you again for this just beautifully orchestrated day and celebration, the 100th anniversary here at Latvijas Banka, and looking ahead where we want to be in the next 100 years. It's a beautiful time to connect hands and to connect hearts and reach for the stars. Thank you.
Thank you, Gretchen, for this very inspiring. Thank you. Inspiring and touching last note. So I hope that, and I would like to express my most sincere thanks to all the three panelists for your contributions and active participation and commenting and complimenting each other. It was very, very interesting to follow, and hopefully also our audience found it as interesting and something to reflect upon during the remaining lunch break, and as well as when networking with the other conference attendees. So I hope that this discussion has contributed to increasing knowledge and also understanding of the urgency of working on the biodiversity and climate related issues, including developing strategies, mitigating negative impacts, and implementing nature-positive projects and activities. And I've made some 3 notes for myself that I will bring with me today, is that we have been borrowing from the planet too much for too long, number 1, so we have to act now. Number 2, and it's not just for the sake of the future generations, but it's for the sake of our life and future generations. And I really appreciate what you said about young people, because when you ask and discuss a lot with young people about the biodiversity issues, there is really very high sense of urgency and pledge to act. So thank you all for being with us today, and on behalf of the conference organizers, so I would like to thank each and every one of you, and for participating in the discussion, also sending in some questions that we were managed to address, and providing valuable thoughts and experiences. And I think we've all deserved now a very good lunch break and an opportunity to reflect on what we've heard. Thank you so much. Thank you. Thank you.
Thank you.
And now, ladies and gentlemen, after the lunch, it seems many been so exhausted already. Yeah, they disappeared. But now we will have an interesting panel, Future of the Money. And let me invite moderator, Mr. Mārtiņš, Deputy Head of the Monetary Policy Department, Bank of Latvia, to take the floor.
Thank you, Iris. Ladies and gentlemen, good afternoon. And thank you very much for coming back from the wonderful lunch to the third panel of the conference. I don't know if it's glass full or glass empty story here. I think it's more glass full, so I think those who have come will experience a quite interesting and exciting discussions, because I think the topic of discussion is really about the money, and this is something that is of interest for every one of us, as we are using money almost on an everyday basis. And usually when we think about money, we think about the stability and predictability, and usually everything that is related to money is very conservative. But then when we think about the future of money, this is when things become interesting, because that's when the money, the usual traditional concept of money, which is traditionally very stable, comes and interacts with technological change. And technological change, as we know, is quite the opposite of stability. The things really change rapidly, and sometimes we even see some destruction of the existing systems on the way. So the really exciting and largely unanswered question is what happens when money and technology, when they meet and collide and collapse. So what is the real result and the outcome of this development? Nobody really knows. So that's why I think this topic is so exciting and so interesting, and of course also very uncertain. And usually the prudent approach when we are faced with something that is highly uncertain is to look at this issue from various perspectives, and look from different points of view. And this is what we are going to do today, also faced with this issue of how to define and how to describe the future of money. And for this reason, we have a very distinguished panel also for this occasion, and we are very pleased and very honored to have people on this panel for which I think if I were to go through their resumes, we would spend the whole time allocated for discussion just reading the CVs. So I think I can be relatively short here, because these people don't really need the introduction. And as our first speaker, I would invite Ms. Florence Dis, the head of ready-to-pay partnerships from Google, and she's responsible for Europe, Middle East, and Africa region. Welcome.
Thank you. Mārtiņš, where would you want to be? Here?
Yes, please take a seat here. Next, we welcome Mr. Barry Eichengreen, Professor of Economics and Political Science at the University of California. Thank you. And finally, we have also the pleasure to welcome Mr. Stefan Ingves, Governor of the Sveriges Riksbank. So thank you all for coming and being with us today. We are very pleased and very honored to have you here. And of all the regions, I think being in Latvia, in this part of Europe, I think we have experienced both sides of money and technological progress. I think over the last 20 years, I think maybe more intense and maybe more we've been more exposed to these changes, both in terms of money, but also in technological progress, than maybe some of the other people in Europe, because our historical background and our historical experience has really showed us quite visibly the benefits of the stability of money. So usually when we talk about the changes in money, or God forbid, using the expression reforms of money, people get worried because during the Soviet times, the experience with the changes to monetary system have not necessarily always been very positive and very pleasant. So people understandably are quite skeptical when we think about and when we talk about possible changes of money. But then, on the other hand, if we think about what has happened in Latvia over the last 20 years or so, and your governor mentioned this yesterday, then really the changes have been really tremendous and impressive. So on the other hand, people here get kind of used to changes and also situation developing quite rapidly, and to progress which is quite inevitable. So I think for our people and for audience today, I think it's quite relevant. What does it mean in this fusion of money and technological progress? What is the outcome? I think people are really willing and eager to learn a lot of what you're about to say. So without really further ado, I think we might go straight to the discussion on the future of money. But before we think about the future, I think it's worthwhile just discuss the present day and present situation a little bit more. And if we think about the biggest changes that are visible to the public right now, throughout Europe, I think especially in Sweden, is really the disappearance of cash. And when we think that cash used to be the most direct product, which is most directly linked to the general public, because public uses money, and when they use the cash, they use the central bank product. So really, when we see what is happening in Sweden, it's been really quite rapid decline of the cash. So Governor Ingves, can you perhaps explain what's happening in Sweden at the moment? Why are people abandoning cash at such a rapid rate? And what's so special about Sweden? Is this something really special about Sweden, or is this just the future for us all in the making?
Well, a few words on that, and no, I don't think that we're special. Maybe we're ahead of some others, but the basics will be the same in many parts of the world. Usually when we talk about central banking, we talk about price stability and we talk about financial stability. But let me add a third concept or a third term. This is really about transactional efficiency. And when it comes to using money in my environment, the outstanding amount of physical cash has been halved in about 10 years. And now that, of course, raises the question: how did that happen, and why is it that that's the way it is? Many other countries are heading in the same direction, more or less, but in our case, it went pretty fast. So I think that the use of physical cash is really on the low side compared to many other countries. And when I have people visiting Stockholm, sometimes I've had relatives calling saying that, well, how much cash should I bring? And I say, don't bring any cash, because it won't work. And why is that? A few reasons. First of all, we used to have a wealth tax. The wealth tax is gone, so people have no reason to keep physical cash in the mattress anymore for that particular reason. About 10 years ago, the banks introduced a payments app, making it possible, by the help of the central bank, and that's actually important here, making it possible to transfer money from one cell phone to another. And then also what we did, we started closing our branch offices, and we more or less stopped subsidizing the physical distribution of cash. And it cost money to handle money. And that meant that this started this whole process, and then it simply became easier to transact either using the internet or your cell phone or cards of various forms. And that sort of has pushed the whole system in the direction of using very, very little cash. At the same time, in order to make this happen, you need a certain level of trust in the system as a whole, so that people sense that, okay, I'm sending money from one cell phone to another. I'm not going to get cheated. The money is actually going to go where it's supposed to be going, and strange things don't happen sort of en route on that. And all these things sort of taken together, and basically, given that in our corner of the world, we tend to be early adapters of new technologies, that base was there, and I think that was very, very important. And to give you a bit of perspective, if you go a little bit more than 100 years back in time, the highest number of telephones per capita in the world around 1900, 1905 was Helsinki and Stockholm. So been there, done that, we've done it before. And also, as part of this process, when I started talking about this about 7 years ago, it wasn't that there was a plan saying that everything is going to go digital, cash is on its way out. We just saw that it was happening. So then among some of my colleagues, I started talking about this, and they got really upset, saying, why is this guy from Stockholm talking about this thing? And it even has happened that in other fora that other central bankers have come to me and said, well, Stefan, can't you just tell the general public to use cash? Because we don't want to do this, we don't want to go down this route. But no, I cannot tell the general public just to use cash. They choose for themselves what they want to use. And that's because essentially money is what we have in our heads when we define what money is. And that's why money is what is considered to be money will vary over time, and with different technologies.
Thank you. I think we'll discuss what we mean by various forms of money just in a minute. But my next question is to Professor Eichengren. Looking at what's happening, especially in Sweden, but also in all other countries, are you also worried about the disappearance of cash? Because we heard this morning that if suddenly there's no cash around, there's no anchor, there's maybe no direct link from the society in large and the central bank. So in what view, in your view, how important is cash for the functioning of the economy, and can we really expect to see cashless economies in the future, and what risks or opportunities can this entail?
So let me start by congratulating the central bank for its 100th birthday, and saying that I'm delighted to be here on this panel because, as everyone knows, the currency note was invented or first brought to Europe by a Latvian, Johannes Palmstrecht, who was the head of the Bank of Stockholm, whose failure led to the creation of the Riksbank, without which presumably Stefan wouldn't be up here today. And I know all this because I Googled it. So it's a well-constituted panel. I had one comment, Stefan, prompted by what you said. My interpretation of the Swedish experience, the decline of cash in Sweden, is that it's very heavily driven by this app, Swish, which was constructed by 4 big banks with support and guidance from the central bank. And that deals with the problem of payments fragmentation that would otherwise make it inconvenient to use an app as opposed to using cash. So I agree completely that The Swedish experience points up the role for a central authority like the central bank in the 21st century, as well as earlier in history. I don't think, will cash disappear? I have to answer like an academic and say it depends on how you define cash, because its exact nature has evolved over time, from bronze coins to paper notes to numbered checks produced by banks, and undoubtedly it will continue to evolve. Finally, coming to your question, no, I'm not worried about a world in which this supposed anchor of physical central bank money provided directly to individuals goes away. I think that link will still exist via electronic money that central banks already transfer to commercial banks, who all then transfer the same money balances to their customers. And the reasons why money matters, that the central bank and government stands behind it, and that it can be controlled for economic management purposes, monetary policy, in other words, will still exist.
All right. So my question goes back to Governor Ingves. You said that you cannot just say to people, just use cash. But think about flipping this argument around. Can you say to people, by no means, don't use cash anymore. Let's go all cashless, because it's cost inefficient way, and we have to respect that there's technological progress that affects all of us, including money. So can we imagine the situation when really the central bank decides that we don't need cash anymore?
No, we don't decide. We don't decide anything. It's the general public that decides. We just provide the general public with what they want. And if they want physical cash, they'll get physical cash. So here, the general public, they have made their own choice. And because of the transactional convenience when it comes to making payments in different ways. And that's because ultimately, at the end of the day, when you talk about money, we tend to think about money nowadays, particularly when we talk about electronic money in different shapes and forms of it as something technical. But at the end of the day, it's usually national parliaments that decide what money is. So you need to combine technology with some kind of a legal framework. And our legal framework is such, and I suspect it's roughly the same here, that on the one hand, physical cash is what is called legal tender. So if you use physical cash to pay somebody, you can't go to court and claim that you did not get paid. That's kind of the definition of legal tender. But it is not compulsory, according to the law, to receive payment in physical cash. And that varies, of course, from country to country. So there is a free choice because there is freedom of contract. So if I choose to pay you in frozen chickens and it's fine with you, then it's okay to make a payment that way. And that, of course, makes it possible for stores to say, no, we don't, or restaurants or whoever to say, no, we don't accept cash. We only accept electronic payments, and that is also part of this process. And ultimately, at the end of the day, if that's a good way of doing things or not such a good way of doing things, that requires some kind of a political judgment at the end of the day. And it's not, at least in my system, it's not in the hands of the central bank. But let me add to that also that cash, physical money, it's kind of similar to bottles in the sense that you need a distribution framework to do that, and you recycle these things. And you send out money, people use money to pay, and it gets worn out, and it comes back to the central bank. And eventually, if the use of cash ends up being on a very low level, then you actually you lose the capability of transacting using cash because people don't know how to use it. And it costs money to manage money. And that's why you have this push towards more electronic transactions in one form or the other. Now, a good point then it would be to say, well, you know, what if the lights go out and there is no electricity? So as a sort of a backup, I do think we will have cash in physical form for as long as we can foresee in one form or the other, but then most of it will just be stored someplace in vaults.
All right, so I can conclude from this that as long as people will demand cash, there will be cash.
Oh, absolutely.
And there's no minimal threshold under which the bank says it's not efficient anymore, so let's abandon it. So even if there's one person who just wants cash, there will be cash provided by the bank.
Time will tell, because as I said at the outset, once we stop more or less subsidizing the handling of cash, then you very quickly push the whole system towards something electronic, and we do have the right to charge. So time will tell.
Right. So I'd like actually to ask a question also to you, Ms. Diaz, because you have been silent so far. But as Professor said, it sometimes only takes one app to just put in motion the process that drives cash out of the system. So what is your views coming from really the technological firm who could potentially be the driving force that results into a cashless society? Do you simulate in your business scenarios or your business plans also the scenario where the society is totally cashless, or you still assume that the cash will be with us for quite some time?
Let's put it to the test. So hello everyone, I'm Florence. I am acutely aware that I represent the private sector today in the form of Google. I'm expecting lots of questions after this. Hopefully this will be a good way to wake up after lunch. So maybe the first question is, who here has paid with a mobile in this room? If you could just raise your hands out of curiosity.
Yeah.
All right. Okay, so that's pretty good. I'm not going to ask whether it's Android or Apple. We won't go down that route. No. So I guess, so I look after Google Pay partnerships for EMEA. And one thing that was very interesting when we launched Sweden a couple of years ago, when I was speaking with the press right before our launch, one of the big questions that kept on coming up is, are you responsible for the demise of cash? And do you have a responsibility? And the answer I gave at the time was, as long as there is a need for cash, and as long as there is a solution that cash is providing, cash will exist. If there are alternatives that solve for the problems that users have, and at Google we're obsessed about users and finding solutions for users, and I'm sorry we call them users, but citizens of the world, then this is our job, right? Our job is to find solutions that really help our users. So cash has had an incredibly important role. And I see it in society, for example, I see it with my parents, who are much older. I see it in younger people. There still isn't a proliferation of digital devices across the board. We can't assume everyone has a smartphone. And until we find alternative solutions, cash will exist.
Okay, so thank you. We're already starting to move towards the next topic, which is really the future of payments and how those payments can perhaps, or perhaps not, into the future turn into some alternatives, maybe forms of money. When just let's focus on the current state of things. It obviously differs across countries, but here what we experience here, that actually the current system where the banks are at the center of all the monetary financial system, also on the payment system, actually works quite well, and also the banks are quite innovative, and they provide quite good solutions that work quite well for their clients. So I'm just wondering, where do you see the business case also for really these technological companies to come in and start competing maybe with the banks? What is your advantage in all this infrastructure? Where do you see the business case? Because you're the ones who have actually skin in the game. If future doesn't turn out the way you planned, then actually you might take quite a big hit. So you must be really confident that you have a good business case. Yeah.
So this is an interesting one. I think the payment strategy at Google has changed quite a bit. And we've definitely had our learnings. The one thing, so there's a lot of misconceptions of what we stand for, why we do things. So I'm going to take a little bit of time. I'm going to try and explain it. We have a very broad mission statement at Google. It's to organize the world's information and make it universally accessible and useful. So please note that last point. I think we're still working on the useful. And the one thing that a lot of our ecosystem partners haven't understood, I think now we're at this stage where there is that understanding, which is why you have so many countries now and so many partners that collaborate with us on Google Pay. When our user searches, if they want to transact, it's completely in our interest to help them do that, whether they're online, whether they're offline, whether they're taking the metro or the bus. Because that will be a continuation of their search experience. And so for us, it's an incredibly strong value proposition because it makes our own search engine, it makes our own advertising model work very well. It's very different to what other private sector companies are doing in payments. So we do it because it drives our overall business. Does any of you use Google Maps in the room? Yes? Okay, I see a few hands. Google Maps, we don't monetize Google Maps directly, but it's this indirect revenue strategy we have. By using the map, it's an extension of search, it's just a geographical search, and so therefore it brings this ecosystem together. So when you talk about competition, we get invited all the time. There's always a newspaper article saying, Google will become a bank. And we have had, in the past, forays into this area. So we had a project called Plex in the US where we decided to co-develop a bank account with a couple of partners, including Citi. I'd say very rapidly we realized that this was not what we are good at. And I say it publicly here. There are things that we are good at as a tech company, and there are others that we are not good at, and this is where collaboration comes into play. So if we can learn quickly from some of the mistakes we make, if we can understand where is it that we bring value, that's where we go ahead. So to your point, we work with over 4,000 banks. We cannot force any bank to work with us. I have been working and speaking with some banks, I think of one in the UK that's just recently signed, after 4 years of negotiation. So there are alternatives. It's an open ecosystem, it's an open platform. If banks want to have their own mobile banking, mobile payment systems, they can do that. We are on our toes. That means we have to provide value for our banking partners to say, yes, this makes sense. And of course, then at one point, we might get to this topic of data. As soon as there's a discussion about privacy, which there was this morning, as soon as there's a discussion about data, there tends to be an assumption that we might be doing something strange with them. If we work with over 4,000 banks, it's because we're incredibly clear about what we do with data or not. And as you've understood, the value proposition is to extend the search and to make it as useful and valuable as possible to our users. So in order to work with this ecosystem of partners, we are particularly clear about what we do and what we don't do. And it's the same thing with our users. If somebody says tomorrow, I think Google's doing something a bit strange, they don't have to use our products. There are no barriers to exit. And that's also good, because that keeps us on our toes.
If I can give you another quick answer in the interest of making this panel-like, I think your distinction, Martin, between banks and tech companies is increasingly out of date. In other words, banks are acquiring tech companies in order to acquire technology that they can't grow internally, and tech companies are buying banks in order to provide services that they can't provide without a banking license. So you can imagine a convergence there.
Yeah, if you allow me a quick reflection and sort of a kind of a different view compared to yours when it comes to efficient payment systems. They're not efficient. And that's because in many parts of the world, the banking system is rather oligopolistic, and they have seriously old legacy systems. And for that reason, it's probably a good thing to have a few tech companies here and there running faster than the banks. And there are things to do, and a lot of stuff to do. And what I'm really talking about, and this is sort of really getting into the weeds of money and handling money, is kind of back-end systems, not front-end, not what you see in your cell phone, but what it actually takes to get the money to move from one cell phone to a bank, to the central bank, to the next bank, and over to another cell phone. And there you actually need to, there is plenty of room for improvement, both domestically and cross-border, and we'll probably talk more about cross-border in a while. And that's because quite often, in my personal view, it's not in the interest of the banks to move fast, because there is not enough, or has not been enough, competition when it comes to dealing with those things.
All right, thank you. Thank you, Governor Ingves. I think it helps me to ask you my next question, which I was actually about to ask about the view from the central bank. We all know how the existing current financial system works, that it's mostly focused on banks, and banks have this privilege that they can borrow from the central bank directly, so they have access to the central bank balance sheet. If we really want to encourage competition in this field, and we also want these tech companies to be more like fintech companies, also providing this not only technological services, but also financial services to their customers, would this also imply that sometimes into the future, the central banks would have to consider whether they should provide also loans or the access to the balance sheet, really also not only to the banks, but also to the non-banks, because we know that the central banks are responsible for the smooth functioning of the payment system. If really the private payment system becomes very popular, then wouldn't it also become a central bank's responsibility to ensure that even the private system works smoothly, which would also imply that the central bank would have to step in and provide also these intraday loans, not only to the banks, but also the non-banks, especially these fintech companies. So what do you think?
There are two parts to it, because one issue in itself is access to the payment system. And that you can sort of engineer without really, in some sense, using the balance sheet of the central bank. And then the other part of it, and this is really sort of how you decide or want to structure your financial sector, to what extent you need to be a bank or something similar to a bank if you have access to the central bank's balance sheet, in the sense that the central bank would be willing to either lend money to these institutions or, which often is the case, would receive deposits in one form or the other from these institutions. So I certainly don't have the perfect answer to that, and that's because the financial sector always evolves. So we tend to think that the financial sector is in some sense a constant, and that it has been organized in a constant way. But the financial sector always evolves slowly, but eventually it actually changes over time, and that's when you get to grapple with these issues. And that's when you have to decide, and these are truly value judgments, these are not sort of technical issues. Suppose you are dealing with payments, what would the requirements be? What kind of a permission would you need to have in order to have access to the payment system operated by the central bank? And these are tricky decisions. The easiest way is always to say no to everything, hoping that you, in some sense, can preserve the system. But if that's what you do, then everything is going to move somewhere else, sooner or later. So you need to find some kind of a reasonable pace when things when things change, and this is certainly one of the issues, where to draw the line, and if you want to increase the number of participants in the payment system, then what would the requirements be when that happens? And to your comments about Google and what you tried to do and what you decided not to do, I think that many tech companies all over the world will realize, or already have realized sooner or later, that banking is different from being a tech company. And then you have to meet all sorts of other requirements, and it's a completely different business with its own special demands. And of course, you can make that commercial decision to turn yourself into a bank, which is perfectly fine. But then, at least so far, it's been rather difficult to sort of combine banking with being a pure tech company.
Maybe to that point as well. So you were asking, should there be regulation? There is starting to be some regulation. And as we become more important as methods of transacting, then there's more interest and there's more scrutiny. What's been interesting, so that there's different things coming our way, things like PISA. I don't remember what it stands for. If anybody in the room remembers, please remind me. It has payments somewhere in there. But the interesting thing is, you've got so many different types of payments actors out there. I think that there's a real struggle to understand where to start with the regulation. It's supposed to be regulation that is applied to anything with some sort of impact where there is a transaction involved. So for example, for Google Pay, we don't get involved in the money flow. All we do is we're a distribution channel for whatever form of payment tends to be the most popular. In India, it's UPI, their version of open banking. In Europe, it tends to be very much card-based. But again, I think there's this real struggle of where does it become useful? Where are the risks? And what needs to be tackled. And from that perspective, if regulation solves the problem, again, back to solving problems, then that's a good thing. But I think there's still a ways to go there.
Yeah, my question goes then to Professor Aschegrin. Maybe you have comments and perspective on this issue, because we know the Fed has been slightly more liberal to granting access to the balance sheet than we in Europe. So is there really a good way to figure out which entities should have access or which shouldn't have, or it's just a matter of discretion and
entities that pose potential threats to systemic stability when they suddenly lack liquidity, potentially provided them by access to the central bank balance sheet, deserve a liquidity provider of last resort in the interest of systemic stability. But there's a price associated with that, and I can put it more bluntly than the central banker to my left. If you are granted access to the central bank balance sheet, you're going to be regulated by the central bank.
All right. So that's something to think about, definitely. But okay, let's move further, because really we're discussing the future of money, not the future of payments. Well, the payments is really one important part of money in general. But in this story about the future of money, maybe Professor, you can explain a little bit in more detail. How could it happen in theory, or how do you see could happen also in the future that some means of payments become just the means of payments, and some may potentially turn into the fully fledged money when people start borrowing, lending, making savings into this, which was initially means of payment. And we have also seen through the history there's been many means of payments in this country when there was really shortage of cash and money. Almost everything served as a money. Bottles of vodka was used as a money. Whatever was produced in a particular company was just paid out as a means of payments to the workers there. So there's many really means of payment, but of course not all of them turn into the full-fledged money. So how does it happen in theory? On practice, can it really happen? Because really, when we think about the future of money, and also partly why we think the central bank digital currency might be useful, we just go this narrative that one day maybe we can see some private entities developing payment systems that are so popular and so really beloved by the public that really they don't need this link to the central bank money anymore. They can make a closed ecosystem and work on their own. So how does it really happen? How big of a risks are there?
I'm better at analyzing the history than I am forecasting the future. One way of understanding what we're seeing, or will see, I think, is that technology is enabling us to unpack the different traditional functions of money. So there was one thing called money. It was currency and bank balances. And it provided a unit of account, means of payment, which you emphasized, store of value. And now we're unable to disconnect, unpack those functions to a greater extent than in the past. So I think that's one way of understanding this more complex monetary world that we're now seeing. What does the end game look like? I really have no idea, but I do think that some of these functions of money, especially the payments function, are logically natural monopolies that historically the central bank or the state has provided the means of payment because it's efficient for everybody to use the same means of payment that everybody else does. Maybe that network effect that has led central banks and governments to provide the means of payment in the past is weakening because of technology, because switching costs between different means of payment are going down. So we'll see a proliferation of those in the future relative to the past. But as I said to Florence earlier, I'm still waiting for the day when I can transfer. If I'm an Apple Pay user, I can transfer money to a Google Pay user. Not here yet.
We're working on it.
Okay, so basically you're saying that no matter how popular this or that payment system is, there's really no competition to the central bank-based payment system because...
Did I say that?
No, I'm just trying to reframe just for the sake of discussion.
But let me give it a try. Why is it that we have central banks? Because many ask for them. Because they provide services in any society, and they provide a public good, and that is to ensure that payments are finite. And if you only have private sector money in one form or the other, there is a tendency for banks or whoever is sort of running these systems that they don't trust each other. But if you run it through the clearing system of a central bank, then you have received payment in central bank money, and that is safe as it can get in most countries. And there are huge returns to scale when you provide this particular public good. And another sort of twist to it, I'm talking about it from sort of my perspective, coming from a small open economy, which happens to have its own currency. Either I contribute to producing a public good called the Swedish krona, which is efficient and cheap and convenient to use, or if I don't, then people will use somebody else's money. Because money is a product / service. And in that sense, despite the fact that the Riksbank has a monopoly when it comes to the payment system domestically, if we really would fail running that payment system, then of course everything would move somewhere else. And there are numerous cases in the world where that actually has happened, and particularly, of course, in those cases where you have destroyed the value of your own money completely. And that's why you get all these sort of new phenomena, and you find more of them in, let's say, Venezuela, Zimbabwe, and countries like that, because money produces a service to society. And you need that service in order to sort of exist. And either you're nationally you are able to organize yourself in such a way that it makes sense to use whatever the name of your own currency, or you're not. And if you're not, the whole thing is just going to move somewhere else. And when that happens, then of course this thing that we call monetary policy becomes a fiction, because then you have no control over your own currency.
Right, so my question then is to Ms. Diaz, to you. Let's assume theoretically, for a minute, and as a theoretical case, that your payment service becomes so popular, or maybe the central banks fail in delivering the service to the level that people are expecting, that really there's a chance that your payment service can become money. I think this proposal or this idea by former Facebook, now Meta, of the Libra project, I think it was a wake-up call for the central banks. This is when they really felt that there might be also some alternative to their system. So assume that in a not so distant or maybe more distant future, you also come to this decision whether really to make your solutions a fully fledged money. Why would you be willing to really do something like that? What would be your motivation? Because frankly, monetary policy making is not fun. I mean, controlling money is not always the most exciting and entertaining thing on earth. So why do you think it's something that you should be doing? I think your comparative advantage is probably more still on the tech side, not on controlling money and things like that. So why would you be willing to threaten the central bank monopoly in this regard?
So I have to say, I can't answer for what motivated Meta. I think they had certain motivations maybe around their own products and marketplaces and so forth. What I can tell you with certainty is that I don't think there is any motivation to come up with our own digital currency. And as you've heard, the way Google Pay works today is it supports different forms of payment that are already out there, whatever actually solves for users' needs. So I don't see a future that way. I don't think we have the credibility to come up with a rule book that's so critical. One of the interesting points that we were discussing earlier this morning, when we launched our payment service in India, it's called Google Pay, but it's actually on a very different basis. It operates off of this UPI standard, which I call simplistically as their version of open banking. So it's account-to-account transfers. And it became very successful incredibly quickly. We have over 100 million users in India. It's probably because other forms of payments have been very difficult to come by. About 10% of all payments in India are card-based, right? But the thing that we found that was so difficult to deal with is that actually there was not an established rule book. And so even though it was a small percentage of payments that were not going through, 0.01, when you translate that to the volumes that we were seeing, that means a lack of rules and guidelines for many, many people. And we were actually put in a situation where we had to work with the ecosystem, work with regulators and so forth to be able to, provide something, of course not coming from us, right? Coming from regulators, but some sort of rule book that had the credibility to be pushed through. So from that perspective, and back to the point I was making, everybody should focus on what they do well. And if they don't do things well, then you do get crypto mania in places like Argentina and goodness knows other countries. So there is a certain credibility that you have to build up, and you have to be consistent about that.
All right, thank you for pointing the issue of crypto out, because that leads us to the next topic of our discussion, because from what you have said, it doesn't sound very threatening to the current central bank systems. But of course, there's another guys out there in the crypto crowd and decentralized finance who are actually thinking about really providing alternative to the current monetary system. So my question is really to the Professor Green. Is there something really particularly new in this idea that we can have this decentralized money? What are the history lessons? Because we have seen something similar in the past in the history of the US, and how that history and lessons are relevant for us today, and what's common, what's different from this situation. So what's your take on this?
If you want to think about this proliferation of cryptocurrencies as competing monies, and I'm not sure that's the right way to think about them, as I will explain in a moment. If you want to think about it that way, I think the weight of history points in the other direction, away from competing currencies toward the efficiency advantages of having a well-managed central bank and government provide what is called in the Federal Reserve Act, for example, a uniform currency, where every dollar bill is worth the same as every other dollar bill. So in the United States from 1836 until 1860, the free banking era, everybody's bank, your bank and my bank and Stefan's bank could issue their own dollar bills. And they didn't trade one-to-one against one another because their redeemability for a dollar's worth of gold or silver varied according to how much gold or silver that bank was thought to have in its basement. So it took us a century or so to move to the Federal Reserve system, at which point we basically had a uniform currency, and I don't think we're going to go back. When I think about cryptocurrencies, I think about plain vanilla, the three classic types, plain vanilla cryptocurrencies like Bitcoin, which are not money because they're not a reliable store of value. They're not an efficient means of payment. Transactions are expensive and they're not green, as we were reminded by the morning's panel. Stablecoins are not viable because either stablecoins are unstable if they're partially collateralized or algorithmically collateralized, whatever that means, or if they're over-collateralized, then they can be stable if they hold more than a dollar's worth of real Federal Reserve cash for every dollar's worth of stablecoin they issue. They will be stable, but they won't scale because I've got to give you more than a dollar in order to get a dollar's worth of stablecoin, which might be good for me if I was a money launderer or had other nefarious motives, but most of us do not have such motives, so they won't scale. And the third version is CBDCs, and I'll leave that to your next section.
Right.
Yeah, no, I very much agree when you use the term unstable coin. Because if you sort of scratch it on the surface, usually you have a hard time really understand what it is that you have bought. And that's when it gets really, really difficult. And then if there's nothing, no underlying value at all, then we're moving into coin, this, that, and the other. And then, I mean, that's sort of like trading stamps or something. And if it seems to be good to be true for a while, that's probably the case. And you can make some money out of it, but it's certainly I don't think that those, whatever you call them, will turn into sort of efficient currencies that you can really use for mass payments. That's something completely different.
All right, thanks. I can understand, especially why Governor Ingves is skeptic about cryptocurrencies, but let's just for the moment focus on the arguments why the crypto is so popular, and we cannot deny it, that it's out there, and people, at least part of the population, seem to have faith in cryptocurrencies, and that the crypto is also part of the future. So at least some part of the population has these strong beliefs, and part of the motivation and reason why people are investing in crypto is, at least for some part of the population, is that what they're saying is that they basically start losing trust in the traditional central banking, and crypto sort of provides some kind of hedging against central bank mistakes. Because we know that for the money to be really money, all three functions need to be respected. And with the rise in inflation and Also, the central bank actions that we have seen over the past few years, when really the central banks were conducting a quite massive quantitative easing programs and policies. At least some part of the people, economically active people, start asking questions whether central banks know what they're doing. And if not, then maybe crypto is a good way to just partly hedge against potential mistakes that the central banks are doing at the moment. So what do you think of this? Is the rise of the crypto in a way inevitable, or have central banks also stimulated the popularity of the crypto? I'm asking you because you're the only central bank governor on the stage, so I think
well,
it's inevitable that I ask you.
A quick reply to that is that we've been around for more than 350 years, and we're going to be around for another 350 years, and stuff comes and goes. And it's clear what we're supposed to do, and as long as on average we get things right, it's going to stay the way things have been in one form or the other. Technologies will change, but you do have a point in the sense that most unfortunately, you always find 5 to 10 countries in the world that are seriously working on destroying the value of their own money. And in those cases, it's very, very hard for the general population to deal with that, and then they look for something at least momentarily better. And that's when some of these sort of phenomena show up. But I do think that we have some lessons that we have learned that Barry already referred to, and that was what things looked like in those days when we did not have central banks and there was sort of free banking. And all the difficulties that came out of that, particularly due to lack of standardization and trust in the system. And keep in mind that everything about money, many things about money, that's the way to put it, a better way to put it, is not about technology. Money is it's about what we have in our heads. Money is about common conventions defining what money is, and that can vary over time, and that means that we can get all worked up about new technologies, but very little change when it comes to money. So you can very often find the same phenomena, sometimes 100 years ago, 200, 300, 400 years ago in the past, but of course using the technologies of those days, but in terms of the intellectual challenges and what happened, they tend to stay fairly the same, at least in my view.
So Martin, I do think the premise of your question was correct in a narrow sense. Crypto comes out of a peculiar subculture on the west coast of the United States. Libertarians with a foot in technology, libertarians who distrust everything governmental, not central banks in particular, and those roots have spawned the latest fad and bubble that looks a lot like previous fads and bubbles. Central banks are not entirely off the hook here, of course, because this bubble grew so big because interest rates were near zero for a long time, and people were looking around for anything that might have a positive yield, and they convinced themselves that crypto had a positive yield. And I guess it did until central banks began to raise interest rates, at which point the bubble collapsed.
Okay, so you think, should we warn those people that, should the central banks provide warnings to those people not to think of these crypto assets as something worth investing in, or they have to learn their lesson?
No, central banks shouldn't go around giving people investment advice, but I do think they should monitor this market and worry about justified stability concerns. Stable coins hold a lot of treasury bills, and if they had to sell them into the treasury market all at once because of a run on their stable coins, that would have systemic implications. So central banks need to watch.
As sort of a technical add-on to your reflection on stablecoins is that, I mean, stablecoins are very similar to basically mutual funds. So a good chunk of coins is more about regulatory arbitrage. You create a copy of something that already exists, but then you claim that your copy is something completely new so that you don't have to follow the same rules of the game. And that's really what's sort of bubbling under the surface when it comes to stable coins. That's at least my way of looking at it. And my guess is that if stable coins were to really, really grow in size, then it would be up to the public sector to decide whether they actually are mutual funds or not. And if you come to the conclusion that they are mutual funds, then the regulatory arbitrage goes away, and then it's sort of harder actually to make money out of producing stable coins.
All right, so I think before we move to the next topic, I think there's one more thing I would like to discuss with you, which is very much related to this cryptocurrencies and decentralized finance. And no matter what we think about the future of these crypto assets, the underlying idea, I think one of the underlying ideas of this crypto crowd is that central banks may not always be perfectly right and may not always pursue optimal policies. And I think we can agree with that it's probably too much to ask to always be 100% right and never make mistakes. So just thinking about the ways the central banks are controlling the economy and implementing this monetary policy, my question is actually to Ms. This. Can we actually, into the future, imagine a situation where we can have also the algorithms produced by companies like you, because you seem to be very good at spotting patterns and linking things together, and we know that the economy is cyclical, so things tend to repeat themselves. So can you imagine working on the algorithm that could perhaps help implement monetary policy better into the future than it has been implemented in the past, and spotting trends earlier than we have had in the past? As an example of that, maybe we can look at the current inflation rates, which nobody could have predicted even a year ago. Maybe with better technology, better algorithms, we would be able to predict these kind of things well ahead in the future. So what do you think of this? After all, I mean, if artificial intelligence can manage complex logistic networks, monetary policy cannot be more complex than that, no? Can it?
So we do actually have a team of economists that work at Google. And if anybody studied economics at the time I did, you might remember someone called Hal Varian. I know I had his econometric books. He works at Google. So we do have, it's true that search provides an incredible amount of interesting data that can tell us something about what people are feeling and sensing today. We had something called flu trends, where we started working with governments, and we started realizing that just by tracking people searching for flu symptoms, we were able to see where there were flu outbreaks throughout the world much faster than a lot of the regulators and the health entities we were working with. So there is some really interesting data that's actually already accessible today. So it's not about working on it in the future. I'd say there's actually quite a bit of that already ongoing. We have something called Zeitgeist. People don't often tap into it. At any one point in time, you can see what the top search queries are across the world and by region. So if suddenly it becomes crypto or Ethereum or meltdown of stable coins, you can actually track that as an individual user. So if you take that to the next level, there are probably certain possibilities that are already happening today, and already lots of collaborations happening there. But again, I'd say it's one input amongst many. So yes, it's hugely powerful, and we are able to glean a lot of information from the data and from the search patterns that we're seeing, but it's one angle.
Right.
So
the technology problem.
I must object that Hal worked at Berkeley before he worked at Google.
Of course he did, and he wrote his books long before he ever hit Google. Absolutely.
Yeah, but I keep interrupting you, Martin. I apologize, but I think I would draw a distinction between big data and machine learning, which are useful for picking out patterns, and central banks use them already, on the one hand, versus an artificial intelligence replacing Stefan and his committee.
That was something I was about to ask later to Mr. Ingves as well. There are always things to be learned from data. There is no question about that. But I have worked together with quants also for many years, and given the random nature of real life, sometimes you are way outside the equations. And then you have to react to that in one way or the other. And I think that that holds even more in small, very open economies, because it's like sailing a small sailboat on the ocean and thinking that a few equations can sort of control everything. Well, that will take a long time if we ever get to that point, because how do you include a pandemic in the equations, and then how do you include a war following the pandemic? And all sorts of other strange things that have happened. But it's absolutely so that it is very helpful to get better real-time data than what we have had in the past. And there are all sorts of new technologies evolving. Given that data is available that wasn't available in the past, that is useful to have, but only up to a point. And if that were not the case, then we would not need 6, 9, 10, 12, whatever the number, boards of central banks. Then you could just, put a computer there and run monetary policy that way. And that's not going to happen in the near future.
Thank you, Governor. That is very encouraging. Otherwise, I was just thinking if I could retire before this future comes. So I think I will probably be able to retire before we are replaced by artificial intelligence. But I was just about to ask a question to really Professor Eichengreen about maybe a broader question about the really importance of discretion versus really following the rules in monetary policy. Because if we look at the past central bank decisions, then often case they actually follow quite closely the mechanical rule, which is known as a Taylor rule. So my question to you is probably, looking at the historical perspective, has this extra discretion by the central banks, or the ability to actually deviate from these monetary policy rules, really produced value added which would really justify the existence of the central banks in the first place?
Yeah, I think by and large it's produced value added with a few episodes of value subtracted sprinkled in. You're talking about constrained discretion, of course, where the central bank gets a mandate and other implicit constraints from the legislature and society. And then it can do what Stefan was referring to before, put its finger in the air and notice that the wind has shifted and modify the rule.
So we'll actually need central banks also into the future. So can we conclude from this that in 100 years we'll still be here also in the form of central banks, not in the form of computers discussing among themselves?
Maybe this is a trivial empirical observation. Almost all countries have a central bank in one form or the other. And why is that? If central banks were not needed, you would only have them, let's say, half of the countries in the world or something like that. From time to time, you can actually lean on somebody else's central bank. But the functions are still the same because they appear to be needed in our types of societies.
Right, so I think it's encouraging to hear that the central banks will be needed also in quite some time. But I think it's time to move to our last question, which is related to central bank digital currency. And that is also, I think, the question where the views are diverging. Even if we're pretty certain that we're going to need the central banks, there's still the question whether we're going to need the central bank digital currencies into the future. And here I think there's some kind of dichotomy. There's people from the technical side and from the payment side who seem to be very, very eager and very optimistic about the many opportunities that the central bank digital currency would provide, and they are ready to move ahead. And then there's a grumpy bunch of economists who are really questioning what's the point of all this and whether we really need this type of product and whether the needs of the society can be served with already the existing tools, and do we need really to introduce something that of the usefulness of which we are not certain. And of course, the governors of the central banks are in a quite difficult position in this regard because they have to somehow find a compromise, if there is any compromise, and kind of try to merge all these sometimes conflicting views into some kind of coherent strategy. So my question is to Governor Ingves. What do you think? What is the main benefits that the potential introduction of the central bank digital currency may bring to the society as a whole and us as everyday users?
Well, one can come to different conclusions on this, and one way of thinking about it, and there certainly are many different ways of thinking about this thing, is to say that back in the late 1800s, in many countries, private banks issued physical banknotes, and the central bank issued physical banknotes. And then in almost all countries of our type, market economies, the conclusion back then was that the sole right to issue physical banknotes was given to the central bank. And that's the way things have been for a bit more than 100 years in many, many places. Now, when technology changes, then the issue when it comes to a central bank digital currency, which I choose to call retail, so that really we're talking about something which is fairly similar to physical cash, not wholesale, if that opportunity should be made available to the general public or not also in the future when technology has changed. And that is a value judgment. You can't, look at the mathematics of these things. So either you want to do it that way or you do it in some other way. And if you do it in some other way, everything is going to have to pass private sector banks in one form or the other, because before money actually reaches the general public. What I do think is very important, speaking for myself and no one else in this, is that it became very clear in the 1800s when you looked at this that what was extremely important is to define your unit of account, and you want to ensure that the exchange rate between private sector money and central bank money is 1-to-1. Because if that is not the case, then you end up with many different exchange rates depending on in which bank you happen to have your deposits. And from that perspective, I do think that it's a good thing to have a central bank digital currency, using the retail term here. But I don't expect that to be something which is sort of all that widely used, because the same thing holds when it comes to physical cash. Physical cash is used for a tiny, tiny fraction of the number of transactions in most economies, but it's there like a kind of a backstop thing, and it's a way of defining money. So roughly something along those lines, that is what I have in mind. And then in addition to that, you would need a legal definition of money, which takes into account also digital money in one form or the other. Ideally, my preference would be a legal definition of central bank money which is technology neutral. That would be one way of doing it. But where we end up there, that will probably differ and differ quite a lot from one country to another country. And there will also be huge differences in different parts of the world and in different types of countries, depending on the level of financial sector deepening, to what extent most people have a banking account or not, or are sort of electronically connected in one form or the other. And in those countries where the level of development is not such as of yet, then physical cash will play quite a role. And then on the other hand, in quite a number of countries, and you'll find that the central bank is the only functioning institution. This is usually countries in deep trouble in one form or the other, but in those places and in those countries with a fairly high likelihood, a central bank digital currency will be the only digital currency that is actually being trusted, produced at the domestic level, setting aside all sorts of other types of currencies or whatever you call them that you can use.
All right, thank you. Very clear. Of course, you were referring to the maybe less developed countries where really the financial system is not that well developed. But if we now talk with the rather advanced countries where the banking system is rather well developed, would the customers really see the difference between the traditional bank deposits and central bank digital currency? Because as long as they can really convert their deposits into cash, or even if they can't, as long as really there's high threshold which is guaranteed by the state, would that really be different under the CBDC? So really, my question is probably to Professor Aschengreen. Do you see really how, if we are talking really about advanced economies, how the central banks are really solving some market failures, or which exactly market failures is the CBDC supposed to solve? And do you really see that there are failures which cannot be solved otherwise?
I don't think it would be very different in most cases for the final retail customer, and that's what Stefan said as well, that most of our payments are already digital. And there's a lot of private sector competition bringing down the cost to us users, us consumers of doing those digital payments. If they were free because the government through the central bank was subsidizing them, that would save us, the final users, a little bit of spare change, to stay with the metaphor. But it wouldn't be revolutionary. I do think central banks are being prudent to study the possibility of issuing CBDCs, and I think they should continue to study it for a considerable number of years going forward. Most of the arguments, to my mind, are non sequiturs. Financial inclusion can be achieved in other ways, more directly. Cost of domestic payments is coming down other ways. The idea that we can reduce the cost of cross-border payments, international remittances and the like, using CBDCs assumes that they will be allowed to circulate outside the country of issuance, or that we'll, all of us, be able to agree to build an M-bridge, that the US and China will be able to agree on the governance of an M-bridge or a single blockchain on which both of their respective CBDCs circulate. Not plausible in current geopolitical circumstances. I worry that a CBDC would be a rich target for a hacker or a digital terrorist or whomever, and I wonder whether central banks have in-house or know how to hire the best cybersecurity folks.
All right, thank you, Professor Aschengreen, for pointing out risks. But I still would like to maybe just again flip the argument and ask the private sector here. So, what do you think about the CBDC? Do you want this project to succeed? Do you see really merits for your business, or you think this will be more as a competition for some of your products, and maybe unfairly competition even?
So it seems that there's been a very strong reaction to some of the activity that's happened in the private sector around digital currencies. Let's put a name to it, Meta. And the fact that there was even this notion that we could have a completely independent digital currency that was being supported by such a large organization, I think seems to have galvanized a lot of conversations. To your point, is there a difference? What we see today is that a lot of what's going on with money is already digital. Absolutely, right? There's very little cash going on, to your point. So from that perspective, what I try and understand is, what is it that a CBDC does? What does it solve for? What is the problem that it tries to tackle? And if I can understand a little bit more clearly, I see that potential with cross-border. We find it incredibly frustrating, for example, to deal with the different payment types and the different money types across Europe. I see carte bancaire in France, I see Giro in Germany, I see failed attempts at bringing them all together under the European Payments Initiative. If there's something about centralizing, creating clear rules, facilitating cross-border payments, I see that as hugely beneficial, and private sector companies such as ourselves actually can make the most of that. But there has to be that mindset, there has to be that ability. Otherwise, I tend to think there's nothing new that's being solved.
All right, so at least on a theoretical level, it's good that there are also opportunities, not just risks. But let's just discuss a little bit risks, because I think it also not only provides new opportunities, it also entails risks. And I think one of the most important risks that have been mentioned is financial stability risks, because by creating something new, central banks might at the same time also disrupting or at least impairing a part of the existing transmission mechanism which goes through the traditional banks. So my question is to Governor Ingves. Are you worried about these risks that if really this CBDC turns out to be very popular, then actually the central bank would create something that destroys the existing system and the commercial banks on which the current
No, I'm not, because I spent my entire professional life dealing with change. And I've seen what happens if you don't change. Then somebody else will take over the whole system. And sometimes, and this has struck me because I live in many different worlds when it comes to being a central banker, and not only monetary policy and macro or super macro, since I also happen to be dealing, I also deal with plumbing and have dealt with plumbing in other places also in the past. And you just have to accept when you run a central bank that the structure of the financial sector changes over time. And if you don't want to accept that, then you're going to create a problem on the monetary policy side as well, sooner or later. It's not good if change happens too quickly, but some of it you just cannot suppress. And if you try to do so, then you end up with all sorts of other problems. And part of my job in the 80s was to change everything in our financial sector, because previous governments then had practiced what goes under the heading financial suppression for a long, long time, with a system which totally regulated, which in a way which ended up being obsolete and different compared to the rest of the world. So everything had to change. Now we are going through another type of change process. So my point is just that you've got to understand your environment. And then mostly you have to accept the environment within which you operate. And then you try to make the best of it in that environment. Because if you do not go with the flow, you run the risk of becoming obsolete. And that holds more in small open economies than in major economies.
All right, thanks, very clear. But following your logic, the central bank should go all the way. So create this CBDC option as attractive as possible for the public. But in practice, we know that central banks are oftentimes discussing the solutions which try to aim at the middle. Create something that is attractive, but not too attractive in order to preserve also the traditional banking system. So we're talking about ways how to limit the potential demand for this CBDC by physical limits or maybe with some kind of interest rate structure. So I think my question would be to Professor Green and also to Ms. This. Has this kind of solution worked in the past when it comes to money, or it's always the corner solutions? Either you have the money which is widely popular without any restrictions and then it dominates, or you create something that's not used by anybody and then it's just forgotten. And for the public sector, what are your takes on this solution which goes somewhere in the middle, but it seems not try to optimize the benefits for the end user? Can this solution work? I think that's the short question for both of you.
At risk of sounding like a broken record, it can work if there is a solution that's being solved for. A problem that's being solved for. If it's just a reaction and there isn't a user need, it will by definition go away. So from that perspective, I feel relatively neutral about it because time will tell. If there's the proper analysis done of the problems that exist and proper solutions that are designed, it has every chance of achieving some sort of success. There are all sorts of implications that go way beyond private sector to understand what it could mean in terms of stability if you have an existing system and you bring in another one. So I wouldn't be in any position to comment on that. But back to that user perspective, if you're solving for that, and I think the problem that comes in is you may have a mandate to solve for that, but suddenly you may be being asked to solve for other things. That's where things start getting really difficult. If you're solving for something else, potentially then you have to make it very clear to the people that you're providing this to what it is that you're trying to solve for.
There are many central bankers in the room, but I think even the central bankers would acknowledge that there can be socially desirable, socially necessary trade-offs between maximizing the moneyness of money, the liquidity and payment services provided by money on the one hand, and other social objectives. So in my country, your transactions using cash, when you deposit cash to a bank, are basically shielded from government oversight, government's vision, until they exceed $10,000, at which point they get reported to the US Treasury and your confidentiality is compromised. And we have those rules for good reasons relating to things like money laundering and so forth. So I think those kind of trade-offs or compromises are pervasive, and they're pervasive for good reasons.
Yeah, let me add to that society is a complicated anthill. And mostly, it's rare that you end up with what you refer to corner solutions, because there are so many concerns and so many things that you have to be mindful of when you put these systems together. And there are many compromises that will have to be made in order to balance things out in such a way that our societies operate in the way we want them to operate. And let me just use two extreme examples. Some of you, at least those of you who are a bit older, you know what Banque is. That version did not work. But complete private banking did not work either. So we ended up somewhere in between with private banks and central banks. And that's kind of where we are. Technologies change, and then these age-old issues sort of come back, how to balance these things. And of course, different economies, different societies come up with some nuances when it comes to this, and then over time will tell what works and what does not work. So somewhere in the middle. I think that is what one would expect. Which of course goes back to this issue, particularly if there are huge returns to scale, how to define elements of public good in that setting. Because if all those sort of returns to scale stay in the private sector, then you have a tendency of ending up with monopoly profits. And if nothing is done in the private sector and everything is done by the public sector, then you run the risk of not developing fast enough.
All right, thank you. Very familiar. Central bankers typically trying to look for the middle way and never settling for the extreme solutions. And it just remains to be seen whether this is really possible in this case. But I think I'll have to wrap up our discussion with a couple of last questions, because I think we'll have to take also the questions from the audience before we can really finish. I think one of the last questions would be related to the possibility of regulation, because also in relation to this CBDC, because many people have pointed out that the central banks have a dual role in this regard, and sometimes the solutions look not quite clear to everybody, because on the one hand, central banks want the private sector to really provide most of the payment services. So basically, the aim is to regulate the private sector in a way that provides these services in an optimal way. But at the same time, by especially introducing this CBDC, central banks themselves appear as a major players in this kind of infrastructure. And so the question is whether this is really a sustainable system, or don't we think it's a kind of strange to have also the institution that sets the rules and at the same time also tries to be player of the game. So when we think about other games and other sports, and football in particular, it would be really strange then if the referee suddenly announced that he also wants to play and score the goals and wants to score as many as possible. And if you don't allow him to score goals, then he will just show you the yellow card. So how really one can explain the role of the central banks? Do we really have to function both at the player level and at the regulator level, or we really have to choose one or the another? Either let's leave it to the private sector and regulate it, or just say that no, it's going to be under full control of central bank, and we don't need the private sector involvement much at all here. So I guess that's a question for all of you.
I don't think there's a clean and clear answer to the question. Many of our central banks began life as regular commercial banks that just lent money to people and to firms, and not least to the government. And there came a point where we as societies grew uncomfortable with having these special commercial banks competing with other commercial banks. So they were turned into public agencies and got out of the commercial banking business for the most part. So that's the one answer to your question. There should be a clean separation. On the other hand, I'm an economist. On the other hand, you can point to things like payments and clearing payments between banks. In the United States, we have two clearing mechanisms. We have the New York Clearing House, which is a private self-regulating entity organized by 30 big US banks that clears payments between banks. And we have FedWire, run by the Fed, which clears payments between banks, subject to different fee structures and the like. And they seem to complement one another nicely, and I don't know anybody who is saying the Fed should get out of the business of running FedWire.
And what would be your take on the central bank potential involvement in the playing field? Would you feel comfortable also
I feel
having
that
shared the field with the central banks?
I feel that it doesn't really matter what I think. Is I think what the answer is here, because it's already happening. And just as, you know, we might not want private sector players doing certain things, well, that's also moot, because it's already happening. So what we're seeing with these alternative systems and decentralized finance, and, you know, to your point about it being a, you know, a movement starting from the West Coast, it has gained a lot of traction. There's something quite interesting about an open system that's completely decentralized, where participants in that, to the point of participants setting rules and also playing in their own game, that is decentralized finance, right? So I think it doesn't really matter what I think or what the private sector thinks or what the public sector thinks, because it's happening. And then the reality is, how do we make sure that it works as effectively as possible? And that at the end of the day, there's actual benefit and solutions that are being driven. Because I guess for every example that you can find where it's running well, I'm sure there's other examples where it's not running well. So again, the rules have to be set, and then it's good to have a sense of competition to keep everybody on their toes.
All right, so the answers seem to point into the direction that we don't know, or we're not quite sure, but I'll still try to extract one last question from you, quite simple answer on what I think is a simple question. Reading really what some of the other experts think about this initiative of central bank digital currency, you can't really ignore the views who just say plain and simple and warn us against central bank digital currency project turning out as an expensive failure. So in a scale 0 to 10, how think you would rate this probability or the risks that really the central bank digital currency, which we think could serve the purpose, and it's of course being developed with all the good intentions, but we don't know many questions and many factors, and really the outcome is not known at the moment. So how high would you rate the risks that it really turns out to be an expensive failure on a scale 0 from 10?
All right, I'm going to go for it
from
now.
Whoever wants to come first.
I mean, central bank digital currencies will happen. That's for sure. And time will tell. And now I'm talking about what as I call sort of retail, because wholesale we already had in different shapes and forms. Technically speaking, we can talk about many different types of CBDCs also on the retail side. But I do think that we will have central bank CBDCs, and I do think that they will work. And that's also because people have different preferences when it comes to what they want to hold. And in some instances, people have a strong preference for holding something produced by the private sector. In other instances, people have a preference for holding something produced by the public sector. And then the proportions, hard to tell.
So it's a 10 from you?
Yes.
10.
Because I'm in the business of producing this stuff.
We can't fail as a central banks.
Rather than giving you a point estimate on a 10-point scale, I would reformulate the question and ask, how many tries will central banks have to engage in before they get it right?
And how many you think?
Well, so it's not obvious that they will get it right on the first try. Try again until you get a formula that delivers the desired services that people will use.
So, but do you think central banks can afford to be wrong on the first time as long as they learn the lesson and try to come up with the better solutions? And you think we have more than one chance to get it right?
Yeah, so the People's Bank of China is not going to guarantee confidentiality for people using their CBDC for most purposes. Will they have take-up? And if they don't, will they have to change the rules and try again? One can imagine such things happening.
All right, and then finally, what's the verdict of the private sector? How high confidence you have in the ability of central banks to deliver?
So, as a private sector tech company, we live by the motto of launch and iterate. And there's one thing that's wonderful about new tech is that often you can actually launch things that are not completely finished. And there's a huge willingness on the part of your users to actually give you feedback about how to get it right. I don't say that that is directly transposable to central bank digital currencies, but I still think there's something in it, something powerful in it that should be harnessed. And again, that's about really embracing your user base and asking for that feedback. I think we'll see a whole host of different solutions, and it will become quickly apparent which solutions have got it right and which ones have got it wrong. And the hope that you would have is that those that have got it wrong will quickly iterate.
All right, thank you. I was hoping to be able to draw some kind of average, which I cannot do at this time, but my sense is that this panel is rather on the optimistic side regarding the CBDC. And I think before we can, I think, have some time for a couple of questions, we would like to ask a question to the audience, and I would like to put this question on the screen, and you can provide your answers using the Slido app. And we would like really to hear your opinions, given the discussion that we had just right now. Where do you think that the future of the money lies? Is it really the cash that will continue to be the king? Do you think that the current bank system is perfectly fine, so we don't need to change that? Or do you think really the future is the crypto and decentralized finance? Or you think that the central banks will really be able to find this middle way, and the introduction of CBDCs will really solve all the problems and really will improve the system without producing any of the negative side effects? So please send us your views, and we'll see this at the very end of our panel. So I think a couple of questions from the audience that we haven't been tackling in our discussion. One is related to the monetary policy case of having the CBDC, actually, and I think this question goes for Governor Ingves and also probably the Professor Ashengreen. One of the benefits, theoretically, we can imagine of having the CBDC is actually the ability to apply negative interest rates to the economy, which some of the economists think will be a quite persistent and permanent feature of the future, that the economies will need these negative interest rates more often in the future than in the past. So what do you think of this aspect of CBDC? Is it worthwhile?
I can understand the view, and books have been written on that topic, but try to sell a product of that nature and see who will hold it, if the alternative is to hold physical cash. So it really depends on the circumstances when that happens. I'm fully on board when it comes to how you as an economist can argue about these things in terms of the need to basically engineer a negative real rate of interest. But it is going to be almost impossible to convince the general public to hold central bank money of that type if the only argument is because we want to tax you. So I find it very hard to see how that would fly, and it certainly wouldn't fly really in a world where you also have physical cash in the system, because then you get a zero nominal rate on the physical cash, and then you would get a negative rate on the digital money, and then the choice would be quite obvious. The only difference would, of course, be the transaction cost, because it costs money to put money in the mattress and then put the mattress in a vault. So
unfortunately, of all the arguments, monetary policy probably is not one of the arguments for having the CBDC.
It is one of the arguments, but I think it will be incredibly difficult, almost impossible, to move the whole system into that environment. And particularly if you say that for backup purposes you still need physical cash in one form or the other. I'm fully on board when it comes to the economics of the whole thing, but how would you get the general public to accept that?
Fortunately, we're now in a more inflationary environment, so the need for negative interest rates has gone away.
Phew.
Okay, yeah, let's finish on this optimistic note that as long as we have inflation, probably the negative interest rates will not be much of a concern for us. So maybe please see the results of what the audience thinks of. All right. The proponents of all the options. So there are people who think the cash will rule the world also in the future, but there are also quite a number of people who think that technology progress is inevitable, but the median is still in favor of CBDC, so I think it adds confidence to the central banks that at least some of the parts and some of the products that we are designing might be actually demanded by the public. So on this, I think we'll have to finish our discussion and our panel. Many thanks again for coming and having discussion here today, and thank you for listening to us, and thanks.
If you want to stay seated, that's fine, but I'm just about to close the day. So thank you very much. Of course, it's been a fascinating day. So many valuable insights, and as you just saw, we do not need to agree on everything all the time, but unfortunately, we need to cooperate, okay? And it could be tough at times. And that is one of the challenges that I will, of course, bring home from today's discussions. It's going to be about cooperation. But let me first start with an analogy. We all know what does it mean, an elephant in the room. It's an issue that's not being discussed. I think today we don't have any elephants in the room left, because we are freely discussing the issues that are topical. And I think that is very good. Unfortunately, I have bad news for you. We don't have elephants, but we have Godzillas. Who are Godzillas? You know, the very peculiar thing about Godzillas is that it gets bigger and bigger with each new episode in the series. And the same with the problems that we discussed today. If we do not tackle them now, they will have the tendency to get bigger, okay? Unfortunately, that's the case. They will not go away by themselves. And we can very clearly see that in all three discussion panels that we had, starting with inflation. The history very clearly tells that it's better to deal with the inflation problem in the first go. And we are doing it. And as President Lagarde very clearly said, our target is 2% medium term, and we are ready and we will do to reach it. We will do everything that is at our disposal. We will use the instruments that we have to reach those 2%. But of course, it requires a very effective and healthy policy mix. So that's where other policies step in, fiscal policy, structural policy, and in some cases also macroprudential policy. As to the second topic, climate, of course we intentionally discussed today more about biodiversity rather than climate. But it means that there is more than just climate. There are other elements that are very topical, and their cooperation, of course, is going to be extremely important. And as Gretchen Daly said, sometimes even with our smaller sisters and brothers. Okay? But cooperation is at the core of the solution of the problem again. And technological change and its impact on the monetary system. And I think it was a very sober statement by you, Stefan, saying that cash will be around for as long as people want to use it. It's a service that we are obliged and we will continue to provide. But of course, technologies do open other avenues. And I do believe that it's still going to be central bank money and private money. So we will again need to find a cooperation to find a solution that is the best outcome for our societies. So again, cooperation. And I do hope for your cooperation to deal with all these three issues. So thank you very much. Let's join in, let's do our part, and let's meet next year. And next year, not only for the conference of Latvijas Banka's 101-year celebration, but also with a list of things that we have truly done over this year to improve on these issues. Thank you very much, and see you next year. Thanks a lot.